You
Recording
could
in
have a goal
progress.
to retire early and quit your job. Type in a me in the chat box if this is your goal. Whatever your goal is, keep on typing in a me in the chat box. You could have a goal of buying your dream house and a car. You could, you would want to be probably financially independent to provide your children the best education possible. Go on multiple family vacations every year. Give your family the best life and take care of all their wants. Clear your loans and be debt free. It could be to do what you truly want to do, not just things that pay you good money. Okay, it could be for any of these things. I want you all to, in fact, let me go ahead and do something. Let's see if I can launch a poll regarding this. Okay, I have launched a poll, guys. I'll give you all 40 seconds of time. Go ahead and fill in the poll. Okay, why do you truly want to become financially independent? I want everyone, each and every person present in this particular call, to go ahead and fill this particular number, and then I'll share the results with you guys as well. All of the above. Done, 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 done. Okay, guys, 10 more seconds. Okay, I'll give you all 10 more seconds. Go ahead, fill the form, fill the poll. Why do you truly want to achieve financial independence? Done, done. Okay, let me end the poll right now. Let me end the poll. I will share the results with you all as well. Okay, I'll share the results with you all as well. So this is the sort of results why people actually want to achieve this financial independence. I will request you all to take 15 seconds more of your time. Go in your notebook where you have written your goal as 10 crores. Below that, okay, write in why do you want to achieve financial independence, guys. Very very important. Again, what we are trying to do over here is we are trying to build your mindset. Okay, I will request you all take 15 seconds of time and write your why. What is the reason why you want to achieve financial independence? And once done, type in a done in the chat box once you're done with it. Done, 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 done. Okay, 5 more seconds, guys. Type in your why. Very, very important. Very important. This goal and this why, this will help you in times when you're feeling low, when you're feeling like it is not working. This is what will keep you going, and it is very, very important to have that sort of never give up attitude. Okay, that is why I'm making you do all of this. Done. चलो डन 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 चलो perfect. ठीक है, so I'll stop sharing the poll. So this is why you would want to achieve financial independence. Moving forward, guys, this is the 4-day schedule of the Financial Freedom Accelerator program, the 4-day FFA program. Today is day one of the program, where we'll be learning all about finance for the future. Okay, 20th March, Thursday, 7 p.m. to 10 p.m. we'll be learning all about that. Then tomorrow is day two, where we'll be learning all about stock trading, and we'll be building strategies from scratch. Okay, together we will be building strategies from scratch tomorrow, Friday, 7 p.m. to 10 p.m. Then day three is where we'll be learning all about the world of automation, how you can automate trades with the help of AI. That is something we'll be learning on Saturday, 7 p.m. to 10 p.m. And then on day four, okay, that on day four, we'll be learning all about the world of investing using AI and multi baggers as well. Sunday, 7 p.m. to 10 p.m. So, this is the 4-day schedule of the FFA program, and today marks the day one of the program. Super duper excited about all 4 days. Super duper excited. Yes. SDE, superb. So, without any further ado, guys, let's start off with the program. So, let's start off with the learning for the day. Okay, guys, tell me what matters the most for an amazing investment performance. What matters the most? ROI, capital, time, return, research, strategy, return, ROI, XIRR, growth, return, money, ability, allocation, capital. Okay, guys, let me tell you something. Maximum of you are wrong. Maximum of you are wrong. I can tell you, of course, all of these matter for an amazing investment performance. But what matters the most for an amazing investment performance, I have seen only a couple of correct answers. What is it? What matters the most? It is the asset allocation. How much amount of money would you be putting to mutual funds? How much amount of money to to daily trades? How much to long term investing? How much to this? How much to that? So it is very very important to decide how much of your money should be going to which asset class, and that is what is called as asset allocation. One of the most important things in order for you to get an amazing investment performance. How many of you will agree with me that asset allocation is one of the most important things? Yes, correct. That's correct. Agree? Yes. Yes. So, guys, in order to teach you all about the world of asset allocation, let me invite my mentor, my mentor whom I have learned everything from, CFA, FRM, CAI holder, Rahul Chandra sir, over, who will be teaching you all about the world of, asset allocation. Can we have the warmest welcome Rahul sir in the chat box, who will be in order to welcome him so that he can come on aboard and teach you all about the world of asset allocation and more. Welcome Rahul
Uh,
sir. Welcome.
thank you. Thank you so much, everybody. It's really heartwarming to see such warmth and adulation in the chat. Thank you so much, Adi, for the more than humble introduction. But I will try to live up to everybody's expectation. And you know what? I hope that by the end of today's session, both of us, like you, me, will come out wiser, right? And how do we go about doing that? I will share what I have to share from my end, what I can do, whatever I have learned. And I want something from all of you as well, right? I want all of you to, continuously, be there in tune with me throughout the session, be interactive in the chat box. That way, you know what? I can, help teach you better. So with that, shall we get started? Do I have that promise from each and everybody? We'll keep this power packed, right? All right, amazing, amazing. Okay. So I was just going through your chats, right? What matters the most for an amazing investment performance. All of you said the correct answers. But right, all of you said the correct answers. ROI, timing, rotation. I think somebody said sector rotation. Very good. All of these answers are correct, right? But again, all of these answers, are not correct in a sense. Why? This is not the first correct answer that you should have. The first thing that you need to get right is asset allocation. And this is something we call as the investing pyramid, right? And what do we mean by the investing pyramid? Again, we in finance, we tend to complicate stuff. It is pretty simple. I'll try and keep things simple for you. I know, like, usually the finance industry is such that we will have very difficult terms for very simple concepts as well. So it'll be my effort to try and simplify it for you. Let's see how good we can do, right? So if you see at the base of the investing pyramid, we have something called asset allocation, right? I'll come to in more detail as to what we mean about asset allocation. Then after we get that right, we move ahead to security selection, right? Within a particular asset class, what to buy and everything. You decide that. And the last thing is, a lot of you said absolutely correct, when to buy, at what price to buy, and how long to hold it for, all that. But what is the first thing that you need to do? Is it understood? Very simple pyramid. Like, it's a flow. Very simple pyramid. First, you have to get your asset allocation spot on. Correct? Then security selection, then market timing. So, what's the number one thing that we need to get sorted at the earliest? I want everybody to drop in an asset allocation in the chat so that none of you forget. A works wonders as well. Yeah, it saves you time, right? And throughout the 4 days, you will be seeing how time saving investing and trading can be. That will be our promise to you. Okay. So now that we have established that asset allocation is the most important thing, what do I mean by asset allocation? right? A lot of you would already know, but for all of you who do not, so there are multiple types of assets. So you will have diversified bonds, growth oriented stocks, cash reserves, high yield savings. Now, what are these? Savings, FD, that is one thing. Cash that you have in your bank, that can be another sort of asset. Stocks, all of you are here for it, I know. That is another thing. And then you have bonds, right, which will give you a fixed return. So that is another thing. Now, this can be a sort of a very good asset allocation. But before we move into more details, it is our duty to understand what all different types of assets we have at our disposal, us being retail users, right? Correct? We are not big corporations. We are individual people who would like to get investing started. So let's go back to the basics and build our way up. Okay? Okay. Now, so what are the different kinds of asset classes we have available to us, simple people, retail investors? Correct. First and foremost, cash, the Gandhiji note sitting in your wallet. Now, regarding cash, I want to ask you something. If you keep, let's say, a 500 rupee note in your wallet and open your wallet after a year, is it going to increase in value, or is it still going to stay the same 500 rupees? Correct. Somebody said decrease. I'll come to you. I'll come to you later. But it's still going to be 500 rupee note, right? It's not going to become 501, right? So that is why cash is an asset class which gives you zero returns. That is zero growth. Correct? Makes sense. Pretty simple, right? Now, thereon we have something called as FDs. I think everybody knows FDs because our parents would have talked about FDs to us for sure, right? Every Indian parent would have talked to their children about FDs. Whatever money you make, put it in an FD. It'll give you returns. Ekdam secure. Correct? Absolutely safe. So FDs again give you around 5 to 7% returns. Then we have something similar to FDs. Again, I will not get into the nitty-gritties of it. We have something called as debt funds. These are like mutual funds. Everybody has heard of mutual funds, right? Yes. I don't know. I don't think there'll be a single person who has not heard about the term mutual fund. So, like there are mutual funds for stocks, right? There are mutual funds for debt products as well. That means debt means you invest in a debt product, you get interest. Correct? So there are mutual funds for debt, which are called as debt funds. They also, on an average, would give you somewhere around 7 to 9%. Mutual funds sahi hai. Okay. We'll see how sahi mutual funds are. All right. Then we have something called gold. Everybody loves gold. I think we Indians, especially, we love gold. We love our gold, be it in the form of jewelry, be it in the form of digital gold now. But there is something about gold which draws Indians to it. Correct? Gold rising exponentially. Yes, it has been on a good run. So there is again gold, which is historically on average giving you around 9 to 11%. Correct? And gold, as a matter of fact, is a very safe haven for assets, right? It's basically the cornerstone of most of the Indian families, right? They always rely on their assets, and by assets, they will talk about two things. One is gold, and the second thing that we have over here, what is it? Real estate. These are like, if you are an Indian, this will be your go-to asset, correct? Gold and real estate. The property, makan, bangla, ghar, right? So even real estate, now you can straight away buy out a property, or there is something called real estate, investment trust. Again, I won't go into much more detail what REITs are, but there are a mode of investing into real estate, correct? Even they give you 7 to 9% returns. Then there are stocks. Everybody knows about it. That is why you're here. On average, our broader markets, let's say I'm talking about the Nifty and the Sensex, on average, they have given around 12 to 15% returns. Then comes two new interesting things. Like most of you would have heard of these six, and you will definitely have heard of crypto recently as well. On average, crypto has if I'm talking about Bitcoin, it's given more than 15% returns for sure. But along with the returns, what is that one other thing which you get with investing in crypto? Returns to hai. Okay? Risk and sleepless nights. I'll tell you why. Right? First and foremost, your cryptocurrency can go to its all-time high, and within a week can come down by 80%. Just imagine you have 1 crore invested in a crypto. Within a week, that 1 crore becomes 20 lakhs. Will you be able to live with yourself? And there will be no proper logic also. I'm telling you for sure. At this point, it is quite gamified. Let me be very honest. Correct? You won't be able to live with it. So I think it is my personal opinion, till the time this entire industry matures, till the time there is regulation, till the time there is fair play in the entire domain, all of us, we should stay away from it. There are big crypto companies who had their coins, big coins, and they have disappeared overnight because of some legal issue, some technological issue. They have disappeared overnight. So not just volatility, there is that inherent risk, right? If let's say you are investing in TCS, everybody has heard of TCS. It's Tata Consultancy Services, right? If you invest in TCS, a big company, a reputed company, a company with such long-standing pedigree, you will not be that concerned that your money is not invested at the right place. Yes, of course, there'll be ups and downs, but you'll be comfortable, right? That your money is safe. There is dividends, there is capital appreciation, all that reliable. Exactly. I think reliability is something which you can associate with the Tata name always. Correct. So again, my personal opinion, even though cryptos in from a return point of view are very attractive, it's just not worth it, just not that safe at the moment. And then we have something called as alternate assets. Anybody any idea what alternate assets are? Let's see. Painting, correct. So we have art, painting, even expensive liquor, collectibles, stamps, sneakers nowadays. Anybody, if you are a sneakerhead, like for a fact that sneakers are sort of catching up. Watches, vintage items, absolutely. So these are called as alternate assets. But what are we discussing at the moment? This might be, seem very exciting to you. But what are we discussing about at the moment? What is this? Retail investors, right? Alternate assets they require specialized marketplaces. They have specialized people who serve as an intermediary, and you will never be able to tell whether you are buying stuff at the right price or selling stuff at the right price. These are very specialized markets with specialized people who facilitate the entire thing. Okay? Ayush ji, got it? So these are specialized markets. So again, since we do not have complete visibility, people like you and us, we should stay away from it. Got it? But now, what do we know? We know what are the asset classes available to us, retail investors. We know what we don't need: cash, crypto, and alternate assets. Correct? Have we been able to understand this little bit simply? Very simply, in fact. Clear? Crystal clear? Great, great, great. Loving the energy in the chat box, guys. When everybody is interacting so much, it just makes teaching a pleasure. Thank you for that. Now, having said that, what does a sample asset allocation look like? So this can be somebody's asset allocation, right? Somebody will have 60% of their money in stocks, somebody with 30% in bonds, and the rest 10% in cash to meet their essential needs, right? You always have some amount of cash in the wallet. Absolutely correct, uh, Chandiji. Yes. Now, before I move into much more detail as to how you should go about doing your asset allocation, there is another thing that we need to account for. Okay? What is that thing? A lot of you will be happy to see. It is something called as inflation, or something that I call the unfactored nightmare. A lot of you know, right? Why do I call it the unfactored nightmare? You already said it when I was talking about cash, right? You will, yeah. And for the rest of you, let me tell you what inflation is. Okay? Any guesses what inflation is? A lot of you might not know. How many of you don't know what inflation is? A lot of people. Okay. So for the benefit of everybody who does not know, I know a lot of you do know, inflation is nothing but mehengai, or, you know, how things are becoming more and more expensive. This phenomena is nothing but inflation. The phenomena of prices of everything increasing year on year with time. So, for example, if you could buy, let's say, something as essential as potatoes for 10 rupees a kg 5 years back, now it will be around 40 rupees a kg. So, is the potato getting any different, guys? Is the potato becoming super premium potato? Flavor profile is increasing, nutrient profile is increasing. No, it's the same old potato as was 5 years back. But now you're having to pay 4 times more. Correct? So the fact phenomena of prices of products increasing with time, it is something which is called as inflation. Correct? Very simple. Now I hope there is not a single person who does not understand what inflation is, right? All right. Now, having said that, how do we know what inflation is? So our government, or the National Statistics Organization, they release a figure called the CPI. If you read the news, you will have heard about this term, the Consumer Price Index. So what it does is it symbolizes a basket of goods, assuming that all regular people will be using this basket of goods, the main pillars of our economy, and then they see how much that basket of goods' price is rising year on year. And on average, our inflation, as per them, the CPI figure is around 6% per annum. Okay? So this, as per CPI, as per the National Statistics Organization, as per the government, as per the RBI, our expenses are increasing 6% every year. So for example, if paneer is 100 rupees for 100 grams last year, this year it will be 106 rupees for 100 grams. Right? Somebody was still asking if you can, you know, inform me about inflation a little more. This is what inflation is. That's a heavy growth for paneer. Yes. Now, I have a quick question to ask all of you. Do you agree that your yearly expenses are only increasing by 6%? How many of you think it is increasing by 6%? Government is right. Much more than that, right? Yes. So let's see what the reality is. Food inflation hit 10.4% on average. Okay? Basic necessity, by the way, guys, I'm not even talking about luxuries. Basic necessity, food, everybody needs it. 10.4% increase. Medicine, be it the medicines that your family members consume, or hospitalization fees, everything, all the entire stuff has increased by 14% per year. Right? Again, bare essential that each and every person needs. I'm not even talking about fancies and luxuries. Education. I think for a growing economy like ours, education is the only way that we can actually do good for ourselves. Correct? Like now that we are older, we realize why our parents used to run around us with chappals and balans in the hand, that you study, because they knew that that was our only ticket to do good in life. So it's quintessential for everybody's growth. Every person needs it to do good in life, and that is 11.5% per annum. Correct? In education should be free to all. Absolutely. In a few countries, it is taken care of by entirely by the government. Private schools are a luxury there, right? And then last but not the least, again, another bare essential, right, is a roof over your head. Is a roof over your head. ठीक है, rental inflation is 16%. So what did we cover? We covered only the basics, right? Things that every family needs, whether rich, whether poor. Food, right? Medicine, education, and a roof over their head, all increasing at double digit rates. So what is the government on about? 6%, right? So if we combine all this, right, from 2014 to 2024, the average cost of living, the cost that we incur, has gone out up by 8.4%. Correct? It's not 6%. Average rate across the country has gone up by 8.4%. What does this mean? So let's say you could buy this smartphone, right, for 10,000 rupees back in 2014. The same smartphone in 2024 will cost you 22,402 rupees. No difference. Exact same smartphone would cause you 22,402 rupees. Now, tell me something. Have you been able to understand what inflation is, how it erodes the value of money, and you have been able to quantifically, with the help of numbers, properly understood what impact it has on your money? Correct? Got it? Yes. So that is why we call inflation the unfactored nightmare. Now, let's come back to the asset classes we all saw, right? Now that you have understood inflation, right? Let's come back to the asset classes that you all saw. Now, let's go back to fixed deposits. What is our inflation? 8.4% cost of living, right? 8.4% cost of living inflation. What does that tell you? Let's take us, eyes away from whatever there is on your screen. That means if you have 100 rupees with you, I want all of you to listen to me. Okay? If you have 100 rupees with you next year, and you can purchase, let's say, a bag of groceries. Next year, that same bag of groceries is going to cost you 108.4 rupees because cost of living is going up by 8.4%, right? So basically, if your value of money, actual value of money, that is something we called as the real value of money. If you want your real value of money to stay the same, not even improve, forget about that. To enjoy the same standard of living, you need your money to make you at least 8.4% per annum. Yes or no? To maintain the same amount standard of living, to be able to afford the same life. Correct? So anything below 8.4%, is your value of money actually going down? Yes. Above 8.4%, that is where you see some actual growth in your money. Something crystal clear, guys. Anybody who did not understand this, crystal clear? For people who already know this, I am sorry if I am oversimplifying it, but I hope for the benefit of everybody, this is crystal clear. All right. Now, let's come back to what we have on our screen. FDs on average give you 7%. Your cost of living 8.4%. Tell me, I want all of you to tell me, is it a very good investment strategy? Will you put all your money in FD and hope for it to grow? Correct? No. Why? If you are wanting your money to grow, FD, is it the answer for you? In some cases, it is required. Absolutely fine. But for growth, no. Clear? Understood? I'm talking about long-term growth. Correct? Now, so FDs is a no-no. FDs, debt funds, it's a no-no. Let's talk about real estate and bond funds, right? On average, they give you around that 9%. Again, 8.4% and 9%. Is it going to make a lot of difference? No, right? It's effectively your money is going to remain the same. So, what is the point of investing so much money, hard earned money, every month if your standard of living does not change? Is that something all of us want, just to ensure that we are having the same standard of living through and through? We don't want any real growth, any real improvement? No, right? So, again, this is now, I'm not saying these are not required. Of course, you need a roof over your head. Of course, for emergency purposes, you will need some amount of FD. But as growth assets, so let's say you're planning for your future, you're planning for your wealth, right? Will these do the job for you? No, right? What about gold? Gold has been giving around 9 to 11% returns. Let's take 10%, 1.5% returns, 1.5%. Is it going to make a lot of difference? Let's say you put your entire money in gold. Will it be a very wise decision? All your money? Not a lot, right? Of course, gold has had a great run, but it is only recently. You should always take averages, always take normalized, see what it has done over the last 10 years, what 20 years. Then you come to an average figure, right? Don't always take the only good things. Now, then we come to equity mutual funds, right? Even something like the Nifty 50, only the top 50 stocks, large stocks, have given on average 13.2% returns. If you go about making your own portfolio, like people have get more than 20, 22, 24% in their investments itself. Now just compare that with 8.4%. Do stocks make a lot of sense now? Yes. I'm not even talking about multi-baggers. Just being proactive, mindful, and having your own portfolio makes a lot of sense. Just mathematically, don't think about individual stocks at the moment. Mathematically, does it make a lot of sense? This is the only place, right, where on average you will actually see real growth in your money. Correct? Now, again, how do you go about finding the best asset allocation strategy then? Is that a question everybody has? You have understood all the assets, right? You have understood all the assets. You have understood how inflation takes into your returns. After accounting for inflation, what are the only viable options? You have understood all that. Correct? So, isn't it the next question finding the best asset allocation strategy for you? Correct? Now, I will not tell you, but I want all of you to do this analysis yourself. Let's see. Can I have an analyst in the chat? All of you will be doing an analysis with me live right now. And I want all of you to pay very close attention. Can I have an analyst in the chat? You will come to the answer yourself. You'll be surprised. Okay? Let's do a small exercise. There is a time period of analysis is 1990 to 2020. We are taking a 30-year period of analysis. And guys, again, I want your complete focus. Okay? Because we'll deal with a few numbers. I want your complete focus. Okay. So 30 years and we have four assets. Okay. One is the Nifty 50, top 50 stocks in India. Okay. ETF. One is fixed deposits. One is gold. One is the NASDAQ 100. What is NASDAQ? Like we have Nifty 50 in India. So we have something called as NASDAQ in the US, which is and the tech companies are listed over there. So you talk about the Googles, the Apples, the Tesla, the Amazons, the Metas, everything is listed over there. So the top 100 tech companies in the US. So these are the four asset classes. Okay? These are the four asset classes. Now, Nifty over this 30-year period has given 14.4%. Okay? Highest. Over the 30-year period, NASDAQ 100 has given 13.3% returns, second highest. All right. Then we have gold, which is given 9.5% on average. And then we have FDs, which is given 8.9%. Okay. Are we all comfortable with the numbers? Narinder Singh ji, if you can please stop spamming the chat. I'm missing out on everybody else's chat. Thank you. All right. Okay. Everybody, Nifty 14.4, Nasdaq 100 13.3, FD 8.9, gold 9.5. Okay. Now I have a very simple question to ask of you. I'm giving you two options. Option one is Nifty. Okay. Wherein I'll give you 1 lakh rupees and you have to decide whether you want to spend it, invest it entirely in Nifty, or that is 100% in Nifty, entire 1 lakh, or the second option is equal allocation, wherein you'll put 25% in Nifty, that is 25,000, 25,000 in FDs, 25,000 in ETF, 25,000 in Nasdaq 100. Again, guys, remember Nifty has had given the highest return over the period, right? And we are doing the analysis over the same period, this historical analysis. Now, I want all of you to say whether you think the Nifty portfolio would have done better or the equal allocation portfolio would have done better. Everybody saying Nifty. Can I have a Nifty in the chat? Let's see. That's a lot of Nifty. What about equal allocation? Doesn't make mathematical sense, no? The equal allocation. Well, let's see what the answer is. I'll zoom in a bit. How many of you can understand what you have on your screen? So 1990 to 2020, 1 year from the 2020, which is the last year, that is 2020 itself. What happened to Nifty? 14.2% down. What happened in 2020, by the way? Why was Nifty down? Corona, COVID. Yes, absolutely. Everybody knows this. Nifty was down. Okay. What happened to this equal allocation? Equal allocation portfolio was 18.3% positive. Now you would say, you know what? Nifty was down. It was a one-off year. COVID happened. What about 3 years? 2018 to 2020. Nifty again on average 3.2%. Equal allocation 12.6%. What about 5 years? 2016 to 2020. Nifty 6.5, equal 11.9. What about 10 years? 8.7 Nifty equal 12.7. 15 years 12.7, 15.1. How many of you knew that, are amazed? Mathematically, it does not make sense, right? Mathematically, only Nifty portfolio should be doing the best. Did not expect this. You know what? Let's look at something else as well. Can you see the graph? So this graph is the graph of the equal allocation portfolio across the entire 30 years. This graph, on the other hand, is the Nifty portfolio across the 30 years. Right? What are the two major differences that you see in this graph? In these two graphs, what are the two major differences? Equal allocation is higher? Absolutely, yes. Equal allocation, we have already established that the equal allocation portfolio returns are much higher. Correct? And the volatility, all of you, the risk, that there's so much movement in Nifty. What did I say? We want to invest peacefully. We do not want to lose sleep. So much up down means there's a lot of fluctuation happening. There is a lot of risk. On the flip side, this is so much smoother. Correct? Returns are higher and the risk is also lower. So these are the two takeaways. Okay, but what was the point of this analysis? How many of you have this question? Eye-opening, right? Eye-opening for a lot. Correct? What is the point of this analysis? You did this analysis yourself. Thank you for participating. It was lovely on your behalf. Thank you so much. Why did I make you go through this? This is something we call as diversification. A lot of you were asking how. This is based on statistics, right? So what happens? There's a saying, don't put all your eggs in one basket. How many of you have heard this saying? I think we learned it in our childhood. Don't put all your eggs in one basket. Turns out that the simple saying actually comes from a mathematical or statistical concept, right? So it says that if you diversify, the term is called diversification. If you diversify, this is what happens. Even though individually, each of these stocks, let's say, did not do better than Nifty overall, but when you put them together, your entire portfolio as a whole performs much better, right? And how it generates better profits over the long term. We have already seen it, protects against market downturns or black swan events. What is a black swan event? Something like a COVID, unexpected, comes out of nowhere, makes everybody's sleep go for a toss, something like that. The 2008 financial crisis, again, something like that. Uncertainty, right? Nobody could have predicted something like this. Trump is also black swan sometimes. Yes, he can come on and just say anything. Anything. He wakes up in the morning, decides to do something today, he'll go ahead and do it. Nobody can see it coming. Anyways, having said that, and last but the most important takeaway from this beautiful, beautiful mathematical concept is it gives you peace of mind. Correct? One particular company can go belly up anytime, but you are invested in 15, 20 companies, your entire pool of money is much, much safer. Makes sense? Now tell me something. Have you all understood the importance of diversification? I have tried to make it as simple as possible. I hope. Yes? Clear? Thank you so much. Great. Now, how many of you now have this question that that's great? We understood diversification, right? We have been understanding everything, asset allocation, different types of assets, inflation, real value of money, inflation adjusted, which are the good stocks, right? Which is a good asset. Then we learned about diversification. Next question is, how should we build our own diversified investment portfolio? Logically, the next question everybody has, right? Correct, right? Well, what have we learned? Only stocks. Again, I'm saying, if let's say your goal is to grow your money as much as possible, it has to be the highest risk adjusted. By risk adjusted, I'm saying inflation adjusted, highest inflation adjusted returns that you can possibly get. Now, am I saying other asset classes don't come into the picture? No. You will have a certain amount of gold, right? You will have certain amount of FDs, especially if you are somebody who is retired. But if your goal is to get the maximum value or the maximum growth per rupee of your money, then it has to be the highest income generating product, which is stocks. Why stocks? We learned as an asset class that, what did we learn? Again, I'm not just saying it. I want you to understand why. Did we learn that equity or stocks is the only option which, after accounting for inflation, gives only option that gives us good real returns? Yes, we understood this. From a growth perspective, it has to be equities, right? As an asset class. Now, second thing, what did we learn? That diversification is a concept is very important. Correct? So if we combine these two, we have to invest in equities, but we need to diversify across equities. So only stocks. Now, does it make sense? Why only stocks? You need to invest in stocks and diversify across multiple stocks. Now, how many of you now have this question? But there are so many stocks. How to choose the best growth portfolio? Me? Yes. Well, to do that, you need a strong fundamental approach. Very, very strong fundamental approach to go about building your own stock portfolio. Got it? Or was it a bouncer? What do you mean by fundamental approach? Was it a bouncer? Well, fundamentals is nothing but understanding the companies and everything. It's again, as we say, it's we finance people want to complicate stuff, but I am here to simplify it for you. Would you like to see a ready to use fundamental investing idea? Yes, absolutely ready to use. Does not matter whether you come from a financial background or not. Finance, investing, trading can be very simple. The entire aura about it, sentiment is, unnecessary. It's simple. Simplicity yields the best results. Correct? Excited? Shall we go out and see it? Yes? Well, let me introduce you to SpringPad's Alpha Plus investing screener. Right? I'm super, super excited. I want everybody's attention on the screen right now. You can use it. No, yes, yes, absolutely. You don't need a background in investing or trading. See for yourself, as a matter of fact, right? So, this is the average annual return this screener has given. Correct? 64.06%. Is it good, bad? Any guesses? It's great. Right. Now, okay. Nifty 50 during the same tenure gave 13.72%. So it outperformed your Nifty 50 by 50.35%. Great and remarkable. You don't need to understand, just you can at least understand numbers, right? Which were these stocks from the screener? These were the entire list of stocks and these were the prices. Now, again, a disclaimer over here. All of you have heard about SEBI, right? That is the Godfather organization who keeps everybody in check. Yes. So SEBI says when it comes to educating, we can't use data which is, we have to use data which is at least more than 3 months old. So this entire analysis is for 2024, Jan 1st, 2024 to December 31st, 2024, the entire year. Now, exactly, Amina ji. So these were the stocks and these were the returns. Each and every stock, you can see the returns over here. 33, 27, 17, 213, 76, 23, 57, 103, 9.4. So there is one stock out of 10 which gave lower return than Nifty. That is absolutely fine, right? But what about the remaining 9? All of them gave higher returns than Nifty. Correct? Is this good? What is LTP? Last traded price. That means the price at the close of the year. And this is the price at the starting of the year. You can go and check this yourself. Okay? It's good. Any question that you want to ask me? How do you go about finding these stocks, right? How do you go about finding these 10 stocks? That's the next logical question. Well, let me show that to you as well. So again, as I showed you, by the way, we'll be sharing this Excel with you. Do not worry. This is uh, the stocks, as you see, as of December 31st close. So this is the price as of December 31st. This is the price as of the starting of the year, January 1st. And this is how Nifty has performed over the same time. And this is how much the stocks have given over the course of the same period. Now, how do you go about arriving at these stocks? How did you know at the starting of January that these are the stocks that you need to invest in last year? So, for that, we have something called as SpringPad's Alpha Plus Screener. Now, again, I'll read on this page. Correct? So, what you need to do is just come over here, click on run this query, and you will find a list of stocks. So as of today, we have 19 stocks. What I want you to do is sort by market cap. Your job would be to take the top 10 stocks from here. Okay? And then that is how at the beginning of last year, we decided which stocks to invest in. Okay? Now, a lot of you, any queries? the screener, this screener tool that we have built, it's spring pads and this sheet for your back test. You can keep on maintaining it yourself, and you can try it out. There is a list of ideas that we have built this screener on. You can tweak around with it or just use it as it is and see for yourself. Both of this, we will be giving you the link. Happy? A lot of you have been asking, is this paid? Will we be getting the links? Yes? Super happy? Great. Of course, see, if I'm showing you something and we don't give it to you, what is the point of me showing it to you, right? We want you to have actionable outcomes from the FFA. And believe me, we're just getting started. We are not even done warming up. That is how powerful the FFA is going to be for you. Now, again, just to summarize, how do we go about using it? So let's say you use it every year, right? At the beginning of every year, you run the screener, see what are the stocks, do your analysis, and take the top 10. That is how we do it. Okay? Take the top 10 stocks by market cap from the screener. What do I mean by market cap? When you run the screener, sort by market cap, top to low, and take the top 10. Okay? Now, next, invest in it. And most importantly, it is a hold for 1 year period. Correct? Hold for 1 year. If you're buying at the beginning of January, the logic says that you sell at the end of 1 year. Okay? And then what after that? Next year, repeat the process and do it again. Again, after a year, repeat the process, do it again. Now, a lot of you are asking, what about, if I don't want to do January to December? Absolutely fine. Take any other period for that matter. Okay. But it has to be a 1 year horizon. So, see, once you have this, the steps are written: invest and hold for 12 months, then sell it, and then repeat the process again. To be done every 12 months, top 10 stocks. Okay. You can do January to December, you can do April to March, whatever you are comfortable with, but it has to be, you have to give time to your investments. What do I mean by that? Can you sow a seed and immediately expect a tree within a week? Very good quality plant. You sow the seed, and you know what? I don't have time. I want results. Within a week, I want the plant to be there to bear fruits. Not possible, right? Same goes with investing. When you invest, you have to give it time. Correct? Now, this is something, it works wonders over a 1 year period. You can also, as I said, you can go about, tweak this, and see for yourself. You can also, customize this for your own requirement. This is what we do, and we have shared it with you. Okay? Sounds good? Patience is a virtue, absolutely. Now tell me something. Now I have a very important question to ask of you. Now, do you think you can build your own diversified growth portfolio? I've given you the tools, I've given you the screener, I've given you the resources, I've shown you what the possibilities are. It is just about doing it once a year, whenever you want, and then just sticking with it. Most important thing in the markets is to stick with it. Can all of you build your own diversified portfolio? Have we come from asset allocation to building our own diversified portfolio today within just 45 minutes? Yes? Great, great, great. Absolutely. Amazing, amazing. You know what? You are not alone. Let me give you a little bit of confidence as well, right? There are people who have just started from scratch, who we have mentored, and this is the sort of profits that they have been making on a daily basis. 63K, 4.3K. There was a loss of minus 3.8K. Then there was a profit in a single day of 10K. Correct? Now, these are people who have started, who have taken the steps and are doing it on a daily basis. Again, for some people, you would say that, you know what, 4,000 rupees is such a small amount. When you are starting, no amount is small. Correct? No amount is small. 4,000 rupees, it's a good starting point for somebody who is new. Correct? What is most important is being educated, being informed, being, taking informed decisions, which leads to this result. I'm pretty sure somebody like this, if he keeps on doing it, the time is not, far that he or she starts making 20, 30,000 on a daily basis. Can I please explain the screener? The screener is self-explanatory, guys. Let me show that to you. Okay? So all the steps are also written over here for the benefit of everybody's time. Before you start investing, right? Just go to the bottom and click on run this screener, and you will get a list of results. Sort by market cap. That means all the 19 stocks sorted from the highest market cap to the lowest, and then take the top 10. Okay? Is it clear now? All right. Okay. With that, we're just getting started. I want all of you to now be prepared to deep dive into the world of personal finance. All right. Great, great. Aditya, over to you.
Okay, guys, perfect. Guys, how many of you are absolutely mind blown by the way Rahul sir has taught you so far? How easy and simple he has made things in topics like asset allocation and the equal allocation strategy, etc., etc. The way that he has explained things so far, amazing. MB, awesome teacher, very good.
Thank you so much, everybody. Thank you. Pleasure.
Superb, superb, excellent. Okay, so guys, there is more to it. Okay, Rahul sir will be talking more about more screeners, about more strategies, about more of everything as well. But before that, let us quickly cover some bit of personal finance. Okay, we'll quickly cover why the different sort of personal finance concepts which we should be knowing about in order to actually in order to basically save a lot of our expenses. We can save a lot of our expenses. We can transfer wealth from one generation to other as well, if we simply know these concepts of personal finance. Do you want to cover all of this with me? Do you want to cover all of this with me? The simple concepts of personal finance, which will not just help you make it won't help you make more money, but it will help you save more money. And once you start saving more money every single month, every single year, okay, once you know these simple concepts, it will actually lead to that compounding effect which will help you generate wealth in the long run. Okay, so that is the importance of knowing about personal finance, about the concepts of personal finance. So there are a couple of concepts that we will cover. Firstly, we will cover something which is one of the most misunderstood financial concepts in India. Anyone, any guesses on one of the most misunderstood financial concepts in India? 1 rupee save is 1 rupee earned. Absolutely, absolutely correct, Ashish Gupta. Yes. ठीक है, वन ऑफ द मोस्ट मिसअंडरस्टूड फाइनेंशियल कंसेप्ट्स इन इंडिया. Stock market, mutual fund, insurance, savings, FD, time value, FD, SIP. Okay, I see a lot of responses in the chat box. A couple of you have answered it absolutely correct. Okay, guys, life insurance. I personally feel that life insurance is one of the most misunderstood concepts in India. Why so? Because people think, people don't discuss it in their households. Have you seen any a family discuss about life insurance? They'll always be like कि मौत बेच रहा है क्या, मतलब why to think about that, why to basically it is not a clearly understood topic in India. Agree with me? Yes. Yes. And it is very very important. It is very very important because guys, in its core life insurance is a risk management tool. Okay, it's a risk management tool. And it is very very important that for most of us, how many of you agree with me that for most of us, our loved ones are at great financial risk if something happens to us? Type in BE in the chat box if you're someone who is a bread earner of your family. BE, BE, BE. Yes, BE. So basically you have dependents, you have financial dependents on you, and that is why your great loved ones become at great risk if something happens to you. And it's and it can happen to anyone, it can happen to anyone, absolutely anyone and everyone. That is why life insurance is very very important that each and every one of us should be having, because it's a risk management tool. Okay, it is an effective way to make sure our family's financial needs are satisfied even when we are not around. That is why life insurance is so important. But what exactly are we being sold? Whenever you try to approach a company that I need a life insurance, okay, what are we being actually sold? Any agent who comes to your house or talks to you on phone, they will not just sell you a term insurance, which is the exact thing that you're looking for, but they would actually be selling you something which is insurance plus savings or investment. Okay, insurance plus savings or investment, where the premium for mortality is xx amount, but they will be charging you 2x amount. They'll be telling you that the remaining x we will be investing in this and this particular scenario, which will yield you returns after 85 years, or after 20 years you will be getting 5 lakhs every single month. Something or the other, they will design a scheme. It could be a ULIP plan, it could be a smart term plan, it could be anything like that. Okay, so how many of you have faced this, that whenever you have tried to buy life insurance, your agent has always tried to sell you something like this? Me. And guys, this is something which was brought to India, because when a life insurance was brought to India, proper term insurance was brought, it was like ki maut bech raha hai kya, so no one was buying it. So what did insurance companies do? They clubbed insurance with savings or investment in order to showcase it as an investment, so that people realize that they are actually buying savings or investment. But in its core, let me tell you something, that this is something which is not a profitable scenario for you. I'll be explaining it to you more about it later on as well. But I want you all to be absolutely beware from today onwards, that whenever you buy an insurance policy and get your money back, you are being deceived. Is everyone absolutely clear with this simple thing which I just mentioned to you? That whenever you are being sold an life insurance policy and you are being guaranteed a money back, कि after 12th year onwards you will get this much amount of money, after 60th year you will be getting this much amount of money, this etc, we'll be investing this much amount in mutual fund, whichever is greater you will get that. Whenever that is happening, you are being deceived. As simple as that. As simple as that. So always remember that life insurance is a risk management tool, it's not an investment tool. Don't treat it as an investment, treat it as a risk mitigation tool in itself. Okay, so I see a couple of people asking when should you buy. You should be buying your life insurance in your 20s. It is beneficial because you can lock in lower premiums for the rest of your life. Whenever you take your life insurance, there is a premium which is decided, and it is the same premium for the rest of your life. But does it mean that if you are in your 30s, 40s or 50s, and if you have dependents, you should not be taking life insurance? Is that the case? Is that the case? That is not the case as well, at all. Okay, if you have financial dependents, okay, you should be purchasing a life insurance irrespective of whether you are in your 20s, 30s, 40s, or 50s, or later on as well. Okay, if you are above the age of 30, you can and still need to buy life insurance. The premiums will just be a bit higher, but you have to simply accept the fact the best time to buy it was yesterday, but the next best time to buy it is today. So if you have financial dependence, you need to buy it. Whatever the premium is, you should be going ahead and buying it. But buying a proper term insurance is what you should be doing, not going ahead with ULIP plan or investment sort of plan which I just explained to you. Okay, so which one should you be going ahead with, not with back policies or endowment policies or anything like that. You should be simply going ahead with a simple term policy. And what is a term policy? Basically, policy pays on death of the insured during the insured term. Let's say if you're insured till the age of 65 or 75 or 85, your family will get the money if in case any sort of incident happens. Okay, that is the simple definition of term policy, and that is exactly what a life insurance policy is. Okay, those ulips and something, these have been conceptualized later, and it does not make sense. Do not go ahead with that. Okay, why do I say ki do not go ahead with that? Well, I'll show you a simple difference. Let's say if you are investing x amount of monies for your insurance, okay, and ulip is asking you for not for x, but they are asking you for x plus y amount of money. Okay, so ulip is asking for x plus y amount of money, so I am asking you invest that x amount of money for term insurance, and that y amount of money, let's say you are not doing trades, not doing anything which Rahul sir, Pratik sir is teaching you, but simply putting it in mutual fund. Okay, simply putting it in mutual fund. If you're doing that, you can see that in almost for every for every KPI, mutual fund plus term insurance would be a winner compared to ULIP sort of plans. What is ULIP? Couple of people are asking. These are certain sort of term insurance policies where the life insurance company would be asking for extra amount of money, and they would be saying that you will be getting certain sort of money back to your account after some time. ठीक है ठीक है So that is how it is. If you're looking for a full form, it is unit linked insurance plan, the insurance plans. Okay, so that is the concept. Okay, so if you're going for a ULIP plan with a life insurance cover of, let's say, 1 crore rupees versus term insurance plus mutual fund of 1 crore rupees, so in the life, for as a life insurance cover, both are absolutely equal. Okay, annual cost of insurance over here, it is included in the 1.5 lakh. Over here it is rupees 15,000 per year. So term insurance is cheaper. Then money invested per year, because in ULIPs the charges are very very high. That is the why, let's say your money invested is 1.3 lakh. Over here in mutual fund, you will be probably be able to invest more amount of money, 1.35 lakh. Okay, rate of interest what you'll be getting in mutual funds would be definitely higher than what you would be getting in ULIPs. Okay, total corpus after 20 years would, you can see, it is almost more than double if you invest it separately versus you invest in ULIPs. Flexibility, you have zero flexibility over here. You have a lot of flexibility over here. Charges and deductions, it is very very high over here. It is low over here. Lock-in period is also over here in ULIPs, but over here there are no sort of lock-in period. So that is why always never go for any sort of money back sort of policies. Always go for a term insurance. The extra amount of money you can simply invest in mutual fund, or you can use via any of the methods which Rahul sir, Pratik sir is going to be teaching you. What is corpus? It is the basically the amount of money, you can think of it as capital. Okay, you can think of it as capital, total capital after 20 years. Okay, so always never go for ULIP sort of a plan. Always go for term insurance and invest the extra amount of money somewhere else. Is everyone absolutely clear with it and has understood why I say ki don't go for any sort of money back policies? Clear? Absolutely clear. Understood. Very well explained. Thank you so much. Perfect. Okay. So a life insurance of rupees 2 crores would approximately cost 20,000 a year. It would depend on the number of years that you are paying premium. It would depend on your age. It would depend on your health. It would depend on a lot of parameters. An average figure I have kept over here, approximately 20,000 a year. And I'm sure everyone who is, attending this particular program with me, I am sure everyone here can afford that. Okay, so I would request you, if you are someone who has not taken a life insurance so far, okay, you can go ahead and take it. It is something which is very very important. It will help you, help your family when you are not there around. It's a risk mitigation tool. Is everyone clear with the concept of life insurance? Yes, I have taken ULIP. How to change it? There would be something called as surrender value. You can talk to your agent. There would be something called as surrender value. If you think that your policy is not good enough for you, you can surrender it, and you will be getting certain amount of money back from the insurance company as well. Okay, so you can consider it. You can consider if it makes sense to you. Okay, chal. moving forward. Okay, so guys, this was one of the first concept of personal finance that we learned about. What is the second concept that we'll be learning about? It is about the world of good debt. What am I talking about? I am talking about the world of credit cards. Guys, I absolutely love credit cards. I am a big fan of credit cards. Okay, why? You might be asking why. How many of you have this question, Aditya? Why do you love credit cards so much? Anyone? Me? Why? Guys, because using credit cards, okay, using credit cards, let me tell you something, that whatever amount of money you are spending, whatever is your expenditure every single month, I can tell you that you can reduce your expenditure by 10%, okay, by an average of 10% or even higher in certain cases every single month. Every single month, imagine whatever your monthly expenses are, you are being able to save that simply by using credit cards. How many of you are absolutely mind blown when I say that? MB, MB, MB. And guys, that is why I love credit card. You might be thinking कि 10% Aditya ज़्यादा नहीं होता है. Guys, let me tell you something. It compounds every single month, every single year. It compounds and it will lead to wealth creation. Okay, so you can save 10% of your expenses every single month by simply using a credit card. I am one of the biggest promoters of credit card, and let me go ahead and tell you why I feel that I am one. I feel I'm a very legit person when it comes to teaching you about the world of credit card. Okay, so what have I gotten for free using my credit card? Okay, in 2 years, over the last 2 years, what have I gotten for free using my credit card? Let me go ahead and tell you about that. Number one, I have gotten 3 iPhones for my family and business. Here is one iPhone, the other one is there in my other room, and the third one is there in my office. Okay, apart from that, I have gotten flight tickets for two, both me and my wife, to Mexico, both to and fro, using my credit card for absolutely free. Number three, I have gotten one trip to Vietnam for my entire family, a family of 8 people, one entire trip fully funded via my credit card for my entire family to Vietnam. Number four, one solo trip to UK, Scotland, and Ireland. The entire area I went for a solo trip, and it was covered via my credit card. Number five, 55-inch Samsung TV. This is the gaming room at my house, guys. A 55-inch Samsung TV and a PS5 via my credit card. And number six, stays at ITC hotels via ITC Green Points and at Taj hotels as well via my credit card. All of these for absolutely free. Okay, for absolutely free. I have accumulated over rupees 28 lakhs via my credit card itself. Okay, here is the screenshot of my HDFC Smart Buy. HDFC Smart Buy. I use a HDFC credit card where presently I have 8,15,398 points. Okay, 1 point equal to 1 rupee. Over here in my IDFC credit card, I have about approximately 1 lakh 2000 point, where 4 reward point equal to 1 rupee, so it is just 25,000 rupees over here, and it is 8 lakh 15,000 rupees over here. Okay, so this is what I have currently right now. Even after spending on all of these, I have this much remaining. Okay, so accumulated over rupees 28 lakhs via my credit card. So this is what I've been able to do, and I'll be explaining to you all about it as well. But before that, let's learn about why pay via your credit card. Why is it so great? I have explained to you what I was able to achieve, but let me explain you what are the most important benefits of of having a credit card. Number one, number one benefit of a credit card, it helps you with your credit score. Okay, it helps you with your credit score. It helps you later when you want to apply for a loan. Let's say you want to apply for a home loan. Let's say you want to apply for a home loan. Let me show you something. Home loan interest based on different credit score. Okay, so if you have a good credit score, as you can see over here, if you have a good credit score, you will be getting better home loan interest rates as compared to others who do not have a good CIBIL score. That is why having a credit card Number one, it helps you in building your credit score. When you pay via your credit card, and then when you pay the bills of your credit card every single month, it helps you build your credit score or your CIBIL score, which very, very much helps you in the long run. That is benefit number one. Is everyone absolutely clear with benefit number one? Type in B1 in the chat box if you're clear with benefit number one of a credit card. B1, B1, B1. Okay, perfect. Now, what is benefit number two? It helps you with cashback and rewards to pay for trips, stays, and electronics as well. It, as I showed to you, I have gotten so many cashbacks and rewards. All of this are very, very helpful for all of your future purchases as well. Okay, and number three, what is benefit number three? It is you get no cost EMI on many brands which offer no which offer no cost EMIs on credit card. How many of you have been in situations where you have gotten went to Amazon, Flipkart, you want to buy an electronic and you see no cost EMI offers over there on your credit card? Yes, yes. And it makes so much sense, guys. It makes so much sense. Let's say if you want to buy a 1 lakh rupees iPhone, okay, if you are paying it over 12 months, okay, you just have to pay 8,000 rupees every single month. And, the rest of the capital is saved with you. Okay, you do not have to pay extra additional interest or anything like that. Okay, besides that, the rest of the capital is saved with you. What can you do with that remaining capital? What can you do with that remaining capital? You can invest, you can trade, you can make more money out of it. That is why it makes so much sense to pay via no cost EMIs. Is everyone absolutely clear with this concept of why it makes so much sense to pay with no cost EMI, and how a credit card will help you on that? Yes, clear, clear. Never thought like this? Absolutely. Okay, no one would have thought like this, but it makes so much sense. Firstly, you don't have to pay any additional interest. You are paying it over 12 months. Number two, you can utilize that extra money in order to make more money for yourself. Okay, make money, use money to make more money. Okay, so that is why these are the three benefits of using a credit card. Now, which how many of you have this question, which card should I go for? I already see so many questions like this in the chat box. Which credit card should I go for? Yes, I'm using Access, HDFC, etc., etc. Super. So, guys, you might be having credit card. You might not be having credit card, but this is according to me. Okay, I'm not trying to. By the way, I'm not trying to sell you any credit card, promote you, or being an affiliate of any card. Nothing like that. Okay, if you want to take these cards, this is just my suggestion. If you want other cards, take other cards. Whatever the case is, you can do that. But according to me, because I am here to provide you with the right sort of financial education, I would want to go ahead and do that. Okay, so which is the card you should be going for? So I'll be telling you both all entry level, mid level, and high level credit card. So if you're someone who just has one credit card or does not do any sort of spends in your credit card, if you're looking for an entry level credit card, then what is my suggestion? Let's say if you are spending less than 40,000 rupees per month via your credit card, so what is the sort of entry level credit card that you can go for? I would suggest you to go for a SBI cashback credit card. Okay? SBI cashback credit card, this is how it looks. Let me explain you the benefits of this particular credit card. The annual fee is approximately 1,000 rupees plus GST. The reward rate on it is 5% flat cashback. For any sort of online spends that you are doing, you get a flat 5% cashback. Okay? So that is one amazing benefit of this particular credit card. Plus 1% you get on offline, but I would suggest you to use this for online spends because you get straight 5% cashback. Okay, best for all sort of online spends. Reward cap is at rupees 5,000 every month for rupees 1 lakh spend. Okay, since I mentioned it is for an entry level credit card, let's say you are spending less than 1 lakh rupees every single month, so rupees 5,000 you save every single month, 5% flat cashback. Okay, so this is the sort of rewards that you can get over here. Eligibility is 21 to 65 years old. Plus, you should be having a verified income. Anyone can get it. You can just simply apply for it if you fall under this eligibility criteria. Now, what is my bonus hack? I told you that I can save. The credit cards can save you at least 10%. Okay, so what is my bonus hack? 5% you can save directly via this. Okay, how can you save additional 5%? By using it to get extra off on gift vouchers. What do I mean? Let me explain it to you. So guys, if you go to Amazon, okay, if you go to Amazon and simply search for gift vouchers, okay, so let's say if you are wanting to make a lens card purchase, so instead of paying 3000 rupees to lens card, you can get it at a 8% off by taking this gift voucher from Amazon for lens card. Similarly, you can get gift vouchers for multiple. Think of a brand and you will be getting gift vouchers of it. Geomart 3%. Okay. Then Max 8%. Domino's 11%. Like this, Zomato, Swiggy, Big Basket, Sabka. Okay. You will be getting gift vouchers of all such brands. Okay. Big Basket में you can get 3% off. So 5% cashback from SBI. Use SBI cashback card for it, and 3% off you are getting. So how much are you saving? You are saving 8% over here. Similarly, for Domino's, spend 11% plus 5%, 16% you are saving. Max may 8% plus 5%, 13% you are saving. Geomart 8% again you are saving. Like this, for every brand, okay, for maximum brands, you can get gift vouchers in Amazon, and via that you can actually save a lot of amount of money. Again, you might feel ki Aditya, 3%, 5%, 8%, not a lot. It compounds, guys. It compounds, and it will help you create basically wealth in the long run. So that is what you should be doing. How many of you are absolutely convinced right now that yes, even an entry level credit card can help me save 10% of my money every single month? Yes. Yes. And this is, guys, just about a entry level credit card. Let's go further. Okay, talking about mid-level credit cards over here, my best verdict, according to me. Okay, this is my verdict. According to me, the best credit card on in the mid-level segment. Let's say if you are spending, let's say between 40,000 rupees per month to 80,000, 90,000 rupees per month. Okay, so Access Atlas, according to me, is the best credit card in this particular segment. The annual fee for it is rupees 5,000 plus GST. The reward rate, okay, only on 10, the reward rate is 10% for airlines and hotels. Okay, eligibility 18 to 70 years, income should be 12 lpa salaried professional or 15 lpa as a business owner. My bonus tip would be for you to use it to enjoy a nice staycation every single year. Let's say if you are staying in Mumbai, you could simply go to the Taj Mumbai and enjoy a nice staycation over there using the points that you have accumulated. Because if you try to book it by yourself, it will seem like a lot of money and you will never take that staycation. So but if you are using this sort of a credit card, via the points that you have generated over the entire year, you can use it in order to take a nice staycation every single year. So, and you can see, as I mentioned, 10% you can save via for airlines and hotels simply via using this particular credit card. You can use for the gift vouchers and all in order to save further as well. Okay, besides this, in the mid-level segment, I would suggest Access Magnus and American Express card as well. Access Magnus again is good. It for higher sort of spends. They get 17.5% reward rate if you spend rupees 1.5 lakh every month. ठीक है. So SBI cashback में 5% था, 5%. Access Atlas 10%. Access Magnus is giving you 17.5% again, but you have to spend higher in Access Magnus. American Express, again, great card outside India. In India, maximum merchants do not accept American Express, and that is why I do not suggest it a lot. If you're living in India, outside India, it is awesome. Okay. So this is the mid-level segment. Now, talking about the top level segment. Any guesses on the best credit card in India? According to me, the best credit card in India, it is absolutely so many correct answers. It is the HDFC Infinia. The HDFC Infinia metal card. Guys, it's a status card. Let me tell you something. It's a status card. Okay, if you see someone using an Infinia card, you automatically know that the other person is doing great in their life. Okay, it's a status level card. It has the best of the best benefits, that too uncapped. Okay, it is actually amazing. Right now, there is one more new credit card which has been launched by ICICI. It is the ICICI, Emerald Green card. Okay, that is also something, they have given benefits which are even better than Infinia. But I'm not sure how long will they keep those benefits. It is a recent card which has been launched. HDFC Infinia has been there for a while, and that is why it is my favorite credit card. Okay, what is the annual fee for it? It is rupees 12,500 plus GST. On getting this card, you get welcome bonus of 12,500 points. So automatically your annual fee is waived off via the welcome bonus itself. And if you are doing any sort of online spend via Infinia card, you get 3.3%. 3.3% you get at as reward points. Okay, but if you are using it to book any sort of flights, okay, you get a 5x of that. 3.3% into 5 matlab 16.5% you get back. So guys, imagine that you are booking a 10,000 rupees flight and you get 1650 rupees ka straight away, you get it back in your card as reward points. How amazing is that? How amazing is that? 5x, 16.5% straight away back, straight away. No, nothing, no, terms and conditions, nothing like that. Straight away back to your, credit card, which you can use for any of your next purchase. And if you are looking for any sort of hotel booking, let's say you book a hotel for 10,000 rupees for one night, you get a 10x reward point back. Basically 3.3% into 10, 33%. 10,000 ka hotel you have booked, and you get 3,300 rupees back. How many of you are absolutely mind blown by this particular 10x offer or for any sort of hotel bookings? Yes, MB. So this is the HDFC Infina card. Of course, it's a very, very high level card, and that is why the eligibility for it is that you need to spend 60 LPA. You need to have an income of 60 LPA for private sector employees, 42 LPA for government employees, and 60 LPA ITR for self employed people as well. So this is the criteria for getting a Infinia credit card. Or they have this one more eligibility criteria, that you are using some other HDFC card and you have spent 9 lakh rupees in one single year on that. You can reach out to your regional manager and they can help you get a HDFC Infinia card in that particular scenario as well. Okay, so that is the benefit of this particular card. Okay, so absolutely I find this to be the best credit card out there in India. Okay, so guys, this is the best credit card according to me, according to my verdict. These are the ones. There are more than 300 credit cards in India, and more than 80% are absolute trash. Okay, these are absolute trash cards. Okay, there are 20% cards which are decent. Out of these, the best ones according to me, I have mentioned to you guys. Okay, you can choose whichever you want to. There is no stress ki yahi wala lo ya wahi wala lo, etc. Nothing like that. Whichever you want to use it. But my sincere suggestion to you would be to use a credit card. It will help you save a lot of money every single month. Certain times 10%, certain times 15%, certain times 20%, or more than that as well, by simply using a credit card. By simply not paying via UPI and paying via credit card, you can save this additional amount of money every single month. How many of you think that this is a very, very simple thing? But why have I not thought of this before? And why am I not saving that extra amount of money every single month by simply not paying via UPI but paying via credit card? Good idea. Awesome. Wow. Awesome. Amazing. I live outside India. You can go for an Amex card. You can go for an Amex card. You can go for any. It depends on your country. You can choose according to that. But Amex majorly works everywhere. Great outside India. Awesome. Yes. So that is why my sincere suggestion: start using a credit card towards the end of this session. This is one of your homeworks as well. If you are not, if you are already using a credit card, awesome. If you are not using a credit card, get a credit card as soon as possible. It will help you save a lot of money going forward. Okay, so this was about the world of good debts. Okay, guys, credit card is awesome in the hands of a responsible person. It's a good sort of a debt. But what about a bad sort of a debt? Okay. Now talking about the world of bad debt. How many of you are here who are, every single month you get a salary in your account, and then certain portion, certain times majority of the portion of it goes to EMIs. It could be a home loan, it could be a personal loan, a credit card loan, a car loan, it could be any sort of loan. How many of you have EMIs going out of your bank account every single month for any sort of these sort of loans? Me, 50% of my salary, 30% of my salary. Me, me. Not right now, but very soon. Me, 70% of my salary. Wow. Okay, that is a lot. Okay, me. Okay, I see so many responses in the chat box. Guys, what if I tell you that I will be explaining you from a proper mathematics point of view? Okay, I'm not going to be showing you certain sort of magic, or certain sort of way via which I will credit some money in your account or nothing like that. Okay, from pure mathematics and basic understanding. Okay, a way via which you can actually get out of debt a lot sooner than the actual term. How many of you would want to understand this way of getting out of debt, much faster than, like before? Me. Okay, so guys, how to get out of debt faster? The simple answer to this is the simple answer to this is via prepayments. Now, I'm sure a lot of you would be thinking कि आदित्य ये तो पता था, prepayment के बारे में पता था, of course it helps, etc. But guys, if you knew about it already, have you ever calculated the impact that prepayment could bring to your loan tenure? Have you ever calculated the impact? You might not have. I'll explain you how prepayment works and the impact out of it. Okay, certain people are asking how will the money come for it. Guys, we'll be I'll be covering that as well. How will the money come for prepayment or anything like that? I'll be covering that as well. Do not worry about it. Okay, my bank does not allow. Guys, this is not true. RBI has this circular that each and every bank in India has to allow prepayments. They cannot deny prepayment to any customer. ठीक है, RBI has this circular, so your bank cannot deny it, and it is the best way. Guys, it will work as a magic in order to help you get out of debt faster. Want me to show a demo about it? Want me to show a demo about it? Yes, chalo, let's see it with the help of a demo. Okay, let's see it with the help of a demo. So I'll go to this website. Okay, I'll share the link with you guys towards the end as well. Okay, I'll show you share the link with you guys towards the end, so that because I want everyone to focus on my screen right now. Okay, chalo. So guys, let's say we do it for a home loan. Let's say we do it for a home loan for any for in any tier 1 city in India. Let's say if you have to take a house for yourself, for a 2 BHK house for yourself, it would cost northwards of 1 crore rupees. Agree with me? Yes. Some are saying 2 crores, 3 crores, 1 crore, 1.5 crore, 3 crore. It could be anywhere, guys. It could go to 10 crore, 25 crore as well. If you go to Mahalakshmi course in Mumbai, it could cost as high as 25 crores as well. But let's say we are talking about a 1 crore. Okay, let's say we are talking about a 1 crore 2 BHK house in tier 1 city, and you are purchasing that. Now, if you are purchasing, this sort of a house, 20% of it will go to down payment. Okay, 20% will go to down payment. 80% you can take as loans. Agree with me? Yes. Yes, that is what the requirement is. So let's say 80 lakh rupees you take as a loan. Okay, let's say you take 80 lakh rupees as a loan from the bank. Right now, home loan rate of interest right now in India, it varies between 8.5 to 9.5%. Let's say we take it 9% for the sake of simplicity. Okay, it could be, it could be 8.75, it could be 9.25, it could be 9.5 as well. Okay, let's say we take it, it could even 11. Yes, it could be 11 as well, but let's say we take it for for 9% rate of interest. Okay, it could vary from person to person. Now, tenure of interest, it varies again. Certain people take it for 20 years, certain for 25 years, certain for 30 years as well. Correct? Agree with me? 20, 25, 30, it varies from person to person. Yes, maximum people try to take it as 20, but I Generally do not suggest it. Why? Because it takes a lot of portion of your salary. If you take it for 15 years, 10 years, 20 years, it takes a lot of portion of your salary, and then you are left with almost nothing in order to actually pay live your life. Okay, so it becomes very difficult. So generally people take it for 25 years, 30 years. Certain people take it for 20 years as well. Let's say we take it an average of 25 years. With me, let's say we take it at an average of 25 years. Okay, loan start month, let's say we do it from March 2025. Now if we ask this particular calculator to calculate the EMI for us, so the EMI that we would be getting is 67,136 rupees. The principal is 80 lakh rupees, and guys, the interest payable is that of 1 crore 21 lakh rupees. 1 crore 21 lakh rupees. So the total amount that you have to pay back to the bank is that of 2 crore 1 lakh 40,000 rupees, and you have to give it back over 25 years. 67,000 rupees ka every EMI every single month for 25 years you have to pay. So I want all of you to remember. Okay, I want all of you to remember this number. In fact, let me share it in the chat box itself. Okay, 2 crore 1 lakh 40,000 rupees for 25 years. This is the total amount that you have to pay back. Okay, everyone with me so far? With me? Yes? Yes, chalo, done. So this is the amount when it comes to paying back home loan of 80 lakh for over 25 years at 9% rate of interest. Guys, this is where we will add the concept of prepayment. Okay, this is where we will add the concept of prepayment. So let's say we work hard a bit. Okay, that we make just one single prepayment in our entire tenure of loan. We make just one single additional prepayment. Can we do that? Can we put in some extra effort? Can we save some extra amount of money in order to just make one extra prepayment at the end of first year of our loan? Can we do that? Yes. Okay, so let us do that. We will add just one prepayment just for one time. Okay, we will pay one additional EMI, which is 67,136 rupees at the end of first year of our loan. So 2026 ke February May we will be paying that one additional EMI. Okay, and once we do that, we will add prepayment over here and ask this EMI calculator to calculate. And guys, now I want you all to see over here what just happened. Okay, so your EMI amount, which was 67,136, your interest has reduced from 1 crore 21 lakh rupees to that of 1 crore 16 lakh rupees. And the amount that you have to pay right now has reduced by 5 lakh rupees and by 8 months as well. Imagine 8 months of your life, 8 months of your life where you do not have to wake up every single first date of every single month and your EMI is not deducted. Okay, so simply by making one additional prepayment, you save 8 EMI installments. How many of you are absolutely mind blown by this? 8 extra prepayments. In fact, let me share this number in the chat box. Okay? One extra prepayment you did, it saved you 8 months of EMI and approximately 5 lakh rupees. I have shared this number as well in the chat box. Okay? So this is the power of one additional prepayment at the start of at the end of first year of your loan. Okay? So guys, this is the impact of prepayment that we saw. Do you want to reduce this EMI amount further? Do you want to reduce this interest amount further and reduce this time period even further? Do you want to do that? Yes? Yes? Chalo, let's go ahead and do that. So I will remove this prepayment. So I'll remove this prepayment. Guys, can we put, like we did in the first, at the end of first year of a prepayment, can we put that extra effort every single year of our loan? That every single year of our loan, instead of paying 12 EMIs, we will be paying 13 EMIs as we did in the first year. Okay, we will continue doing that for the rest of the years as well. So every year we will simply assume that there are 13 EMIs instead of 12 EMIs. Can we go ahead and do that? Can we go ahead and do that? Chalo. If we go ahead and do that, let's say prepayment, instead of one time, we do it every year. Every year we just do one single additional prepayment. We start from the at the end of first year of a loan, and we do it till the end. Okay? We do it till the end. Okay? Till February 2050. Okay? And if we add this prepayment, guys, the amount which was coming out to be 2 crore 1 lakh rupees, okay, you have reduced your interest, okay, you have reduced your interest by approximately 30 lakh rupees, and 5 years and 4 months, approximately 64 months in total, where you have to wake up and you do not have to worry about EMIs. How amazing is that? How amazing is that? How many of you are truly mind blown by this? Truly mind blown by this. Okay, I'm sharing this number as well in the chat box. By simply making one additional prepayment every single year, you are being able to save 30 lakhs and 5 years, 4 months from your EMI period. That is the sort of impact which a prepayment can create in your life. Absolutely mind blown. MB, MB. MB, AMB, AMB, MB, amazing, awesome, awesome, amazing. So I see, people are absolutely. How many of you feel that, this was an, completely GC moment, a game changer moment for you in paying back your loans? Okay. And you won't realize the importance of it over these 4 days. Okay, after 2 years, after maybe 5 years or 10 years, okay, you will think about this particular day that you attended this 4 days of the FFA program, via which you understood this simple concept, and 10 years later you will thank, okay, you will thank yourself, you will thank me, that you understood this simple concept via which you have been able to save so much amount of money for yourself, which will directly relate to the wealth that you are being able to make for yourself after 5 years, after 10 years, after 15 years. Okay, so this is gonna be the power of it. Now I can read your mind. How many of you have this particular question? Okay, that how to get, Aditya, this sounds awesome, I will 100% be doing that, but how to get that extra EMI every single year? How many of you have this question in your mind? How to get that extra EMI, Aditya, every single year? Me. हाँ, ऐसे ही हालत खराब हो जाती है. How to get that extra EMI every single year? Yes, valid question. Guys, I knew that you would be having this question. And guys, the answer is right there in front of you. That is the exact reason why we are conducting this 4 days of the FFA program. The simple answer to it is by investing and trading in the stock market. The simple answer to it is by trading in the stock market, making that additional money every single month. Okay, because there is no other way that you can make that additional money every single month in order to make these sort of prepayments. Is there any other method? Can you do a second job after doing a 9 to 5? Can you do a 5 to 2 or something like that in order to get that second salary source for yourself? If your employer, either of your employer gets to know, you will be fired from both the jobs. ठीक है, डबल सोर्स ऑफ इनकम की जगह जीरो सोर्स ऑफ इनकम बचेगा. So it is not possible. You cannot trade your time for money. You cannot trade more of your time for more of your money. It is not possible that you generate that extra income via doing two jobs. So how do you generate that extra amount of money? By simply trading in the stock market. And that is exactly what the purpose of the 4 day program is. Is everyone absolutely clear with this concept? Clear? Yes, yes, yes. And would you like Rahul sir to talk more about it on how you can generate that extra amount of money every single year? Would you like Rahul sir to come back and teach you more about it? Yes? Okay. Over to you, Rahul sir. We can learn more about it.
Thank you. Thank you. I think that was a very good premise. I think Aditya, thank you about for teaching everybody about personal finance, because There is something that, not only me, but Pratik and I, we strongly believe true financial independence not just comes from trading, not from investing, not only from personal finance. It has to be a combination of all three to actually be truly financially independent. And people don't talk about all these personal finance topics that Aditya just shared with you. I think that everything that Aditya showed you was, eye opening for most of you, right? Especially the prepayment option, wasn't it? I'm absolutely certain most of you did not know what implications it could have. Yes. And now, coming to, as Aditya said, how to get that extra EMI. Let's see. Let's see if I can teach something more to you today, right? Let's see if I can simplify investing and trading even further. All of us excited? Shall we get started? Yes. Let's see if I can do that for you. Okay. I want all your help, but I won't be able to do it alone. I want everybody's help. I want complete interaction in the chat box. Great. Perfect, perfect. By the way, all the resources, the screeners, the Excel, whatever Aditya has showed you, the EMI calculator link and everything, you'll be getting it by the end of today's session. So do not worry. Everything that Aditya and I are sharing with you, we will be giving it out to you by the end of today's session so that you can go home and tonight itself, you can start, using it yourself. This is a proper action packed program and tangible outcomes are given out to you. You have to make the most. All right. Having said that, I want a small help from you. Okay. Can you help me identify this chart? Okay. Can you help me identify this chart? Any guesses? Which chart is this? Nvidia. Okay. Nifty, gold, Bitcoin. All right. Okay. I see. DeepSeek. Okay. What about this? Any guesses? Again, I keep on seeing the same answers. Pakistan stock market. Okay. AI, SpaceX, Dixon, Tesla. All right. What about this? Uh, Asian Paints, Adani. Well, okay. I got your. I think everybody has the same opinion regarding the stocks. Great. I can only see the same names coming up. Tell me something. If you could go back in time, again, you don't need to be a market participant. You don't need to be an investor or a market expert to know this. It's pretty simple. If you could go back in time, would you have liked to invest in these stocks? Of course, yes. What a stupid question is that? Correct. Now, let me tell you what these stocks are. The first one was Gravita India. The second one was Zomato. And the third one was Motilal Oswal Financial Services. Right? But how many of you have this concern? Like, great. Returns are there to be made if you know how to, find the right opportunity. Correct? That is a given, irrespective of market condition, irrespective of anything. Returns are there to be made. What is not a constant factor or a common factor is whether there are enough people who can identify these opportunities. Correct? The stock market will always give you opportunities. Having said that, how many of you, and I have noted this a couple of times today, it's good that you asked me these questions when I was teaching you earlier. How many of you have this concern? But you know what, sir? What about falling markets? Worst, even, what about market crashes? Especially in context to what is happening. I don't believe we are in a market crash by any means, but of course, the markets have fallen. Correct? All of you, horrifying question. Let's, you know what? Let's go back and see what the major market crashes, like proper crashes, have looked like. Let's take a trip down history, shall we? Do I have everybody's attention? Yes? Why do we learn history in school? Any guesses? First of all, I did not enjoy it, but of course, it had some relevance. Why do we learn history? Because history repeats itself. That's very well said. You learn from history so that you don't make the same mistakes others made, before you. Correct? So let's learn something from history. Your concerns are absolutely valid. I've taken the four biggest scams or the market crashes across the last 30 years, right? So, first things, everybody has heard of this, the Harshad Mehta scam, 1992, right? We had an entire series which the entire country loved. Risk hai to ishq hai. Correct? The market during before the market crashed, it was at 45,000. And by market, I mean Sensex, Nifty was not then there, right? 45,000, it crashed all the way to 2,000, right? 52.5%. Correct? 52.5%. Now that's a market crash. What about the dot-com bubble? Originated in the US, 1998, 2000s. The entire world felt the repercussions of it. Market was at 6,150, went down to 2,600, 58% decline. What about the global financial crisis? Yazdi ji says Lehman Brothers, absolutely right. Correct? 21,200 to 8,160. CDOs, absolutely. CDOs, CLOs, CMOs, mortgage-backed securities, all those products, right? The entire world went belly up. Markets crashed by 61.5%. Subprime mortgages, absolutely right. There was a very good movie on this, The Big Short. Anybody seen it? Beautiful movie explaining the entire thing. If you haven't, I would say, you know what? First focus would be the 4 days of FFA. After that, take out some time and just give that movie a watch. It's great. 61.5%. What? COVID. Nobody could foresee it, right? 42,000 to 25,600. 39%. So 52%, 58%, 61%, 39.5%. Your concerns are absolutely valid. The market does not always go like this. Everybody who is selling you that story does not know anything about the markets, and you're absolutely correct. There are downturns as well, huge downturns. Correct? So, I hope everybody understands this about the markets, right? It is not only upside, it is not only rosy. There are downsides as well, right? But, my friends, it is one side of the story. We are just seeing negative 52, negative 58, negative 61, negative 39. We have to see the complete picture. Now let's look at the table again. Harshad Mehta scam, recovery time took 7 to 8 years for the markets to recover. And once the markets did recover, Ritesh ji, it went up to 3x. That means 100 rupees, for example, if you have 100 rupees and it grows to 300 rupees, that is called 3x. You're not talking percentages, you're talking multiples, right? At 17% CAGR. Let's see about the dot-com bubble, right? Markets rebounded in 4 years this time around. It went up after in the subsequent rally, it went up to 8.1x. That means 8.1 times at 39% CAGR. What about the US? The US recovered in 7 years. India did it in 4 years. CAGR is annual growth rate, compounded annual growth rate, average growth rate in a single year. Okay? What about 2008 financial crisis? 61% drawdown, right? Markets recovered in 3 years. In the subsequent rally, what did we see? 5.2 times. The market went up by 5.2 times. And the US again took 5 years instead of India's 3 years. 2 more years. What about COVID? Minus 40%, recovered in 9 months, not even a year. What was the subsequent rally? The markets went up by 3.4 times, again at 31% CAGR. Even the US had near about 1 year recovery period. So, what do you learn from this? What do you learn from this? What does history teach us? Let's see. Markets always bounce back. From 1990 to 2020, every crash paved the way rather, for the subsequent all-time highs. highlighting what? India's unshakable market resilience. What is the second learning that we get? Recovery windows are shrinking. Harshad Mehta scam took 7 to 8 years to recover. COVID, we recovered in 9 months. Correct? What about the crash to boom multipliers? Post these slumps, there are often spectacular rallies, sometimes multiplying returns several fold. As we saw, right? All the subsequent rallies did not give returns in percentages, they gave returns in times, double, triple, and so on and so forth. And the most significant thing is, if you see, India is ahead of the global counterparts. That means it has outpaced global recoveries, proving the long term power of India's growth story. And this is something which is very real. India is a fast growing emerging economy, and we are growing so fast that we are able. And so, in terms of our markets, we are very self reliant. People talk about FDI, FII all the time, right? But we have to understand that our markets are predominantly driven by our people, which is growing. You people being here, right? You are the next investors, you are the next traders. Our markets are going to keep on flourishing. That is why India has had a tendency to always be better off than its global counterparts. There is a very famous person, you can look him up, Raul Paul, right? He's not Indian or Bengali by any chance, but you go through his he was the manager of a very successful hedge fund, that he has said that we have tried to take bets against India for the last 30 years and we have never been successful, never ever been successful. So what he says is, if you if you invest in India, good, but never invest or bet against India. RAUL Raul Paul. And last but not the least, these sort of downturns, right? India, as I said, it's a fast growing economy. If you see, the valuations are always premium, but when these downturns happen, you find good stocks at very reasonable prices, right? So again, it's a opportunity for everybody to invest in these quality companies at a fraction of their prices. Because where is the price going to go? It is going to go up. These good companies, if their price is only falling, everything is happening the same, it will go back to normalcy. But you being smart, right, you get to pick them at much lower prices. Remember, what did I say at the starting? The investing pyramid. What is at the top? Knowing when to buy and buying at the right price. Correct? So again, these give you windows of opportunities to buy at good fundamentally strong companies at a fraction of what their price would have otherwise been. Okay? Now, understood? Have we learned something from history? Your concerns, everybody's concerns are definitely valid, but it is only half the story. It is only half the story. We want to be investors not just for 1 year. It's a marathon. We want to be investors. We want to reap the benefits for life. We have to have a bird's eye view, right? If you listen to any of the famous investors, right, be it Indian, be it global, you will see they don't talk about, the next 3 months or the next 6 months. They'll always talk about the next 2 years, the next 3 years, the next 5 years, the next 10 years. So it's very important to have a complete holistic wisdom of anything that you are doing. Makes sense? Have we been able to learn something from history today? I hope it was not difficult to understand. Yes, great. And you know what? Usually, th- the markets can be very simple. People overly complicate it. Let me tell you what the usual sort of mindset is, right? I'll tell you. People think of these as roadblocks, but let me see if I can demystify them for you. People usually say, you know what, I don't have the skills to identify these trends. Well, anything, like any other thing in the world, it can be learned. How many of you had financial background or domain before you entered today's call? But have you been able to learn something? Majority if you did not. But you now know what is diversification, what are asset classes. You now know how to use a screener to get started with your investing journey, right? So it was just half an hour, but you learned something. It's not something which is difficult. People make it complicated for no reason whatsoever. So this is not a problem at all. Second thing, I'm already doing it, but it is not working out. Great. You know that something is wrong. So you don't do that. You try and identify what are good opportunities, what are good ways, what are good methodologies. Again, that is something it can be learned. Correct? If you want to be right, it is important to know what is wrong. Okay? So again, not a problem at all. What's the third thing? I'm afraid of going wrong and losing money. Amazing. Whenever I sit with a client or somebody, if I'm teaching and they are concerned about their money, that gives me the most amount of satisfaction, because they will inevitably be the best investors or the best traders, because they do proper risk management. They won't gamble. They will take educated guesses. So if you're concerned, have robust systems, have tried and tested strategies, be educated, like the screener that I shared with you. Correct? You can go about using that. You can, if you learn, you can build your own screeners. So that is again also not a problem. And last, sometimes I find it really funny, but people say, I don't have enough money to start. How many of you think that you don't have enough money to start? Huh? Okay, tell me something. I want to ask you a question. This is an iPhone. Okay. If I say there's a brand new iPhone and you know what? It is being available at 5,000 rupees. Okay. Instead of 1 lakh rupees, whatever, it is available for 5,000 rupees. Will you buy it? I'm sure every person will, you know, beg, borrow, steal, get 5,000 rupees and buy this phone. Yes. Why? Because you know for a fact that it is being offered at a good valuation. It's a price that is too hard to say no to. So everybody has that money, right? As a matter of fact, you know what? I started with only, I used to make 4,000 rupees in college. I used to spend 2,000 rupees every month behind my expenses, transportation, and the remaining 2,000 I used to invest. That is how I started. Okay, it was only 2,000 rupees. I used to make that 4,000 rupees giving tuitions when in college, right? So again, if you have the right mindset, no amount is small. The discipline is what's most important. Again, a few other questions, which I don't really, rather it angers me. I don't have time to learn trading. Who says or who thinks that trading is a job which requires you to sit glued to your screen from 9 a.m. to 3:30 p.m.? It's not that. Trading is something which caters to everybody. You can have your own styles of trading, your own systems, your own strategies. You can trade at any. If you want, you can also trade 15 minutes a day and be done. Okay, guys, if you have a few questions, again, in the interest of time, after we are done with today's session, I'll be opening the floor to questions and we can go about discussing it. Okay. So again, all you need is just a few hours to generate your second source of income. You don't need to spend hours, right? 15 minutes, more than enough sometimes. I don't have the time to do research. You don't need to sit and go through reports. You have to be strategic about it. That is something it can be learned. Let's say, for an example, I taught you to use a screener today. How long will it take you to invest based on that screener? Barely any time. You do have to do a lot of research? No. Correct? So again, there are different things. People just unnecessarily complicate it. I'm currently content with my 12 to 15% mutual fund returns, right? We just saw the cost of living, the inflation, right? How it eats into it. 8.4% is already gone. Correct? Now it is your job to try and achieve as much more as possible. If the benefit of making this much effort is this much, you will definitely go ahead and do it, right? You will definitely go ahead with do it. Peak framework, I'll be coming to that. And I believe this is not the right time to be in the stock markets. Correct? We just discussed this. We went back in history and learned about this. Every time is a good time to be invested in the markets. Every time gives you unique opportunities. You just need to know what to do in which scenario. Again, these problems are not really problems. Correct? Agree? These are all, mental cells that you have created within your head, right? And we have just gone through each and everything. Why are we discussing all this? Because see, it's important. It's not just learning, it is also about grooming yourself. Our goal is to put you on a similar trajectory towards achieving your goals by increasing your returns. Correct? And you know what? Why am I emphasizing so much on increasing returns? Any guesses? Why am I emphasizing so much on increasing returns? Any guesses? Create alpha, beat inflation, second income, slow and steady, compounding. Absolutely. Like all of you have seen the mutual fund sahi hai, guys. There'll be a calculator, right? You know, they'll put in some figures and you'll see, sir, if you invest this much, you'll become a crorepati. Correct? All of you have seen this. Mutual fund sahi hai. Every calculator will have only these three things: amount of money you invest every month, time period of investment, and the rate of return. Why? Because the future value of your money mathematically depends on only these three things. Okay? Money, time, and rate of return. Can I have an MTR in the chat if you understand? These are the core fundamental three pillars. MTR, right? Now, let's take one thing at a time. How many of you are in a job earning a salary and this salary takes care of your EMIs and all your expenses? Can I have a thumbs up or a hand in the chat? Me. That's a lot of you. How many of you are running a business and that takes care of your expenses? Again, a lot of you. How many of you are students and think you haven't reached the make money phase of your life? Students? Yeah. Well, let me ask you one thing. Are you in a position to make a substantial impact on your lifestyle to create a big corpus for the markets? What do I mean by that? For example, if I told all of you to start putting in 30,000 in the markets more every month, right? Will you be able to do it comfortably without any impact whatsoever? Most people won't, right? It will have some sort of impact, right? Agree? So, agree? It's difficult and not feasible for many. Again, let me ask you another question. Are we on time? We have learned about compounding, right? Or are we late in our wealth creation journey? What do you think? Late? What can be done about time? Nothing. Can we go back, become younger, and start investing again? Even I wish I could go back and do it, but it's not something which is feasibly possible, right? What is the solution? What is the solution? To start now, right? The best time to invest was yesterday. The next best time is to start as soon as possible. That is today. Now, why did we have this discussion amongst us? Because what did we learn? The amount of money that we can invest, we can't just indefinitely keep on increasing the amount of money that we can invest in the markets, right? It is a constraint for us. Correct? It's a constraint. It will be dependent on how much we are making, how much we are spending, what is left. We can only invest that much. So we can't freely go about increasing this. What is the other thing? Time again is not a luxury that we have. This is something that we just have to accept. So is time something which is in our hand? No. So three parameters which determine how much money you end up making, two of them are something which you can't control. You just have to accept. So what does that leave us with? So out of MTR, MT is gone. It is only ROI. That is the only thing which is in your control. You can be educated, you can be smart, you can have strategies and enhance your return, because that is the only thing which is going to determine your future wealth and is in your hands. Does that make sense? Does that answer the question? Why am I emphasizing on returns so much? Yes, agreed. Now, why did we discuss this? What are majority of you people doing with your money versus what you should be doing, right? What are you currently doing? Majority of you will invest passively in mutual fund, index mutual funds, getting 12 to 13% KGR. Very good. Correct? Very good. Is it enough? No. Is it enough? Absolutely no. What you should be doing rather is trade actively and generate around 25-30% annually. In fact, the returns are limitless. Educated stock picks can give you exponential returns. All of you remember what was the screener result? Alpha Plus investing screener that I just showed you. What was the result in 2024? 64%. Okay? Again, some years it will be more, some years it will be high, but you have to go for each and every percent that you can make. Does that make sense? Each and every percent is important, right? No? A lot of you might be thinking, right? Why do I make so much effort for an additional 10%? I'm getting 15%. Why do you want us to make 25, 13%? How much of a difference is it going to make? How many of you have this question? Be very honest. That if I can invest passively, make somewhere between 12 and 15%, why do I have to, go ahead and make 25, 30%? Well, let's see. Let's see. So we don't keep anything vague in the FFA. We will always take data-backed decisions and then talk. Okay. Shall we look at some data? So a lump sum investment. Let's look at simple mathematics. Okay, guys. Simple mathematics. A lump sum investment, that means one-time investment of 10,000 rupees in 30 years at 15% will increase to 6,62,000. Got it? 10,000 rupees becomes 6,62,000 in 30 years. Same 10,000 rupees at 25% instead of 15 becomes 80,77,000. So now do you see, on paper it is just a 10% difference. Do you see what is the real implication of that 10% more? Amazing. 14 times. You can do the calculation. It is 14 times more. Power of compounding. Yes, that is why if you can make 2% extra, fight arm and leg for that 2% extra. If you can make 5% extra, fight arm and leg for that 5% extra. Because the benefits are not just 2% or 5%. It is what? It is not 10% difference. That is why people get it wrong. The difference between 15% and 25% is not 10%. It is 14 times. Now, does it make sense? Well, you know what? This is just nominal. Let's bring back our dear enemy inflation also. After we adjust it for 8.4%, your 10,000 rupees in real value terms after 30 years, real appreciation is 58,000. Not 6,62,000, 38,000 if you adjust for 8.4%. But still after that 8.4%, if you are able to achieve 25%, and if you adjust it by 8.4%, your 10,000 rupees still becomes 7.2 lakhs. Mind blowing. We factored in inflation also. We are only talking about real growth. Now, do you understand? It is not 10%. It is 14 times. It is about perspectives. Powerful, powerful. It is very important to quantify anything. That is why it's not just 10%. It's important to see the numbers yourself. Can I have an MB in the chat? If you found this, if this opened your eyes. Yes, yes. How many of you have this question? But Rahul sir, how can we also generate returns from trading or investing like such? Me? Already, some of you already asked me this question. Well, how many of you think that you're occupied with your work commitments and can only trade part-time? With that, will you be able to generate 20-25%? Is that a concern for many? I'm pretty sure it is. Let's do a fun exercise. Do you want to see yourself as a future trader? Again, trading does not need to be every day. I'll show you something. Yes? Are all of us excited, ready? Eyes glued to the screen? Yes? All right. So let me introduce you to SpringPad's Nifty 50 rebalance template. Before I take you through to the template, let me ask you a few questions. All of us, we know Nifty 50, top 50 companies in the country. Yes, top 50 companies in the country, right? The biggest. Now, what we need to know about Nifty 50 is it is an index, right? And the top 50 keeps on changing. Okay? Keeps on changing. What do I mean by that? Let's say 49 and 50 are not that good. It's like students, right? In a class of 50 students, right? The order of the 50 people will not stay the same. Some people will fail, right? Some people will come new into the class. Yes. Same with Nifty. It's based on performance. And every 6 months, it is based again, reconfigured, and an assessment is done. You know what? 49 and 50 not doing that great. Let's chuck them out. 51 and 52, let's bring them into the Nifty. This is what we call as the Nifty rebalancing. It happens twice a year. Once at the end of March, once at the end of September. Clear? This point is clear. This is the only important thing that you need to understand. Yes, top 50 is not constant. All right. Now, next thing is, so for example, in 2024, September, again, why am I taking September 30th, 2024 example? As I said, SEBI mandates that we use data which is at least more than 3 months old, right? So LTI, Mindty and Divis Laboratories were removed and Trent and Bharat Electronics were added. Correct? All of you know what is Trent. It has been the talk of the town recently. It's a Tata company, yes, and it owns all your West Side, Zudio, Zara, absolutely. So this is owned by Trent, which is a Tata company. Now, talking about Nifty 50, so we have mutual funds, right? And these mutual funds have something called as the index funds, right? One of the most important index fund is the Nifty 50 fund. What do I mean by that? So Nifty 50 is a index, and these mutual funds, what they do, they will have a mutual fund which mimics or replicates the 50 stocks in the Nifty 50. Okay? That is their only job. Understood? So like there is a UTI Nifty 50 index fund, the ICICI Prudential has it, then we have SBI has it, HDFC has it. Most of these asset management companies have their own Nifty 50 index fund. And what do? Whatever happens in the Nifty, they just copy paste it, mimic it. Okay? Replicate it. Absolutely yes. Okay? Got it? Now, tell me something. Let's say a rebalancing is happening. What happens in a rebalance? Some stocks will be removed from the Nifty. Some stocks will be added to the Nifty 50. Exit and added, yes. Removal and addition. Now, if a stock A is removed from Nifty 50 and stock B replaces it, these mutual funds with massive money, right? These are huge, huge mutual funds. I'm talking about any of these funds being at least 10,000, 15,000 crores in value. Okay? In AUM or simply put value, right? What happens? What will these mutual funds do? They will rebalance as well, right? If stock A is removed from their respective mutual funds, right, they will also have to remove stock A. That means they'll have to sell stock A. What about stock B? It is included in Nifty. Now, these mutual funds will also need to include stock B in their portfolio. Correct? Understood? Yes? Correct. Now, let's go to school level economics. If there is so much demand for stock B, all these mutual funds need to buy stock B. There is a lot of demand. What happens to the price? What happens if demand goes up? Price goes up. Absolutely. What happens if everybody is trying to sell stock B? Stock A? Stock A's price falls down. Basic economics. Guys, tell me something. Is it very difficult to understand? Rocket science. You need to be a market expert. Basic class 10 level economics, 8, 9, 10 level. Yes. Now, tell me something. Can we do something with the help of this information? We have identified very logically that the price of one stock is supposed to increase. We have also identified that the price of another stock is supposed to fall. Let's focus on the price of one stock increasing. Can we do something about it? If I tell you that the price of one stock logically should increase, what will you go and do? What will all of you go and do? Purchase it? Yes? Well, that is exactly what the idea behind SpringPad's Nifty 50 rebalance template, right? Every time, what is the logic? Whenever a rebalancing happens, buy the stock which is being introduced in Nifty, hold it for 12 months, and then sell it off. How can we know when the stock is being introduced? So follow the news. It happens every March end and every September end. So for example, the talk of the town is that in this March, which two stocks are being included in the Nifty? Any guesses? One is Zomato and the other is Geo Financials. Correct. Which two stocks are going to exit the Nifty this March end? BPCL and Britannia. Correct. 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 Absolutely. Now, this is a logic, right? This is how investing works. You identify a logic and then you see if it actually works in theory. Shall we see how this strategy has performed? Yes, that is what logic, if it does not do good in real world, does not make sense, right? Let's see if this actually performs. This logic is actually holds true in the markets or not. So again, October 2020 to September 2024, Nifty went from 11,642 to 25,810. Okay. What was the average Nifty return over that period? Again, we have to take historical data. What was the average return? 22%. Great. Great return over the period. Let's see what the logic return was. What was the Nifty rebalance return was? Average annual return 42.89%. Number of trades in the 4-year period is 11. Number of winners 9. Number of losers 2. Win rate 81.82%. Outperformed Nifty by 20.86%. Does it seem good? Our logic is actually making sense. Fabulous. Wow. Let me show you the exact Excel as well. Okay. This is the Nifty 50 rebalance. We have done the homework for you. So 19th March, Yes Bank exited, Shree Cement entered. So when Shree Cement entered, price was this, price after 1 year. The goal is to hold the stock that you're buying for 1 year. That is the logic. Returns in 1 year, 51%. We did the same with Vedanta, 5%. Same when SBI Life happened, 53%. Tata Consumer Products, 21%. Apollo Hospitals, minus 4.6%. Adani, minus 30.9%. Shriram, 87%. HDFC, 119. Again, Tata Consumer Products entered 38%. Adani Ports and SEZ 75, Hindalco 53, right? So, is it right 11 out of 11 times? No. We had two that went really bad, but that is absolutely fine. People who say that, 100% logic guarantee, run away from them. Turn around, run. There are no guarantees in the market. What is in your hand is to be as right as possible. And this is great. Out of 11 times, 9 times you are right. And whenever you are right by a huge margin. That's a good strategy. Correct? And see the returns 42.89. Now tell me, does it make sense? Is it something? Now you tell me something. Is this something which will help you take long term trades on your own? It's a 1 year trade. Twice a year, you have to do this, once in March and once in September end. Is it something which is very difficult? Is it something which takes a lot of time? All of the mindset problems that we spoke about, anything is a hindering factor? No. That is why we say exponential money can be made in the markets along with your job. You just need to have your eyes opened, and that is the purpose of this FFA. People are walking around with their eyes closed because people make stock markets such a complex topic unnecessarily, right? The real question is whether you want to actually learn how to do it. And I know for a fact that you do. That is why you are still with me through the day one of the FFN. Believe me, we are just getting started, right? Now, very quick question. According to SEBI, only 10% people make profits in the market when it comes to futures and options. 90% people lose money. How many of you know why? What is it that the 10% of traders are doing differently that is making them profitable? Any guesses? What is the 10% doing so good? Yeah. Well, three things. Three things. They have their own trading strategy, right? They do proper their own stuff. They don't rely on tips. They don't rely on random telegram channels. And by the way, random telegram channels, stay away from them. Please, I have seen so many people, their lives getting destroyed because of this. It's no joke. Stay away from these telegram channels. Learn a little yourself and do it yourself. It is your hard earned money. Take control of it, right? They don't need to rely on others. Make exponential returns even on limited capital. And their strategy tells themselves, when to enter, when to exit, everything. Second is every trading is logical and rule based. The strategy that we saw, very simple logic, but there is a logic. There is a logic, there is a rule that you need to follow. Twice a year, when rebalancing happens, you invest and hold it for 12 months. That is a simple logic. Third, risk management. Very important. It's not gambling. You have to avoid emotions, stick to your logic, and, you know, have your upside, but also be cognizant of your downside. Eliminates overtrading and other wrongdoings. This is what the 10% people do, and that is why they're able to do good for themselves. So, how does trading with a rule based system work? Any guesses? Manjula ji, absolutely. March to March you hold, and also September to September you hold. How does a rule based system work? Let's see. So, what about the beauty about rules is you can just cut out on subjectivity and guesswork and have a sort of layers and rules to help you define your logic. So, what is the step one? You set up a bunch of rules. Step two, again, another bunch of rules. Step three, another set of to dos. And gradually, what you do is you filter down. Like the screener, absolutely right, Asit ji. We scanned the entire universe, right? There are more than 15,000, 1,500, 2,000 stocks based on our market cap parameters, but we ended up with only 19. So the magic of the rule-based system when it comes to trading, for example, guys, there are 2,671 stocks in the NSE, listed on the NSE. Do you have the manual bandwidth to go and study each and every stock every day to try and find trading opportunities? No. But I think you would have guessed it by now that we are supposed to be smarter traders and smarter investors. You apply one certain set of logic, brings down your universe to 58. Put in another set of logic, brings down your universe to 11. You put another set of logic, brings down your universe to 3. Now, tell me something. Do you have 15 minutes to go and look at 3 stocks? Awesome, amazing. You can spend 15 minutes. Yes, that is the magic of rule-based trading. For example, this is how it works. We'll show you the exact screener and everything. First rule applied, you get 58 stocks, approximately, for example. Second rule applied, you get approximately 11 stocks. Third rule applied, you get around 3 stocks. And then the best news is you can automate this entire trading strategy without any manual intervention, and your money can work on autopilot. Does that sound awesome? Sounds awesome. Yes, you're able to go through all of those 2200, 2700 stocks, but you're only having to spend time on the selected 3. You know what? And that is exactly what day 2 of the Financial Freedom Accelerator is all about. Building your own trading system with a 30% return back tested scanner. Sounds amazing? Yes, yes. Any guesses who will be taking you through it? Yes, yes, you guessed right. It will be Pratik. Pratik,
Hi everyone. Good evening. I was completely hooked to this session. I think we what Rahul shared with us and what Adi shared with us was amazing. But Rahul, give you a glimpse of what we're going to do tomorrow. We are going to be building a strategy live. We're going to be building it together. We're going to understand the what's and ifs and hows. And I can't wait to see all the energy that you guys are showing here to see it tomorrow. So yeah, I'm very excited. I'm waiting for all of you to see you guys tomorrow. Yeah.
great, great, great.
Guys, how many
You are
of
in
you
for a surprise.
excited?
Yeah,
Super duper excited to learn how to build your own strategies along with Prateek sir tomorrow. Super duper excited. Yes, yes, me. Superb. So that is what the day 2 of the entire FFA program is going to be all about. Before that, before I share the homework and we mark the attendance for the day, let us quickly go ahead and summarize everything that we learned in day 1. Can we go ahead and quickly summarize together what all we learned in day 1? Yes, can we do that together? Okay, keep on typing in a yes in the chat box if you think that this is something that we covered in today's program. Okay, first we learned about asset allocation. Okay, we completely learned about asset allocation, we understood about it, and we understood that how it is the most important driver for investment performance. Number 2, we learned about different investment options available and the best to beat the unfactored nightmare. Guys, what is the unfactored nightmare we are talking about? It is inflation. Absolutely correct. Then we learned and we compared the Nifty 50 versus equal allocation strategy. Then we learned about SpringPad's Alpha Plus investing screener that generated 64.06% returns in 2024. After that, we learned about life insurances, one of the most misunderstood concepts in India. Okay, life insurance 101, who should be taking, how to get out, what are the mistakes, why, etc., why you should be taking it. Then we learned about the world of credit card. Okay, which are the best credit cards out of there, how you can benefit out of using a credit card, what is the eligibility out of it, etc. Then we learned about the magic of prepayment. Okay, how amazing this particular thing is and how impactful it could be in the way you have been paying your EMIs. Okay, how you can get out of debt sooner, and how you can save a lot of money for yourself by simply doing once extra prepayment every single year. Then we learned about the lessons from the history of the Indian markets. We learned about getting into the right mindset. Very, very, very important. Type in MS in the chat box if you now truly understand that how why having the right mindset. Okay, even after all the learning, if even after all the implementation, if you do not have the right mindset, you won't be able to sustain in the market. Okay, why having the right mindset is so important for trading. Then we learned about three factors for future value of money, which is amount, time, and rate of return. And what is the thing that is there in our control? It is the rate of return. So that is why we understood why rate of return is so important, and what is the difference between a 15% versus 25% difference. It seems just like a 10% difference, but how compounding year after year it could create this massive a difference. Okay, 14 times the difference, as we saw. Then we learned the secret Nifty 50 rebalance template that generated 43% annual returns. Then we learned about the magic of a rule based trading system that saves 99% efforts, 20 minutes a day, and it's basically a simple money making machine. Okay, so guys, this was about day one. And in day two is going to be absolutely massive. Why so? What are we going to be doing in day two? We will be learning about a stock trading screener, okay, that has generated 30% CAGR on autopilot. Okay, completely on autopilot. We'll be learning about creating your own rule based trading system with scanners. We'll be learning the secret peak framework that we use to be consistently profitable. Then and a lot more that we'll be covering tomorrow only. So join in tomorrow at 7 p.m. How many of you have your calendars already blocked for tomorrow 7 p.m. and can't wait for it? Me. Can't wait for it. Me. Superb. Okay. Now, before we wrap up today's session, guys, very, very important, because as I mentioned, only learning is nothing. Okay. Along with learning, we need to do implementation. Guys, ready for the homework for day one? Very, very important that we do this homework. It will not take you, I am designed this homework very, very these are very simple homework, won't take you a lot of time. I want all of you to do it. Okay? Chalo. Homework number one. Apply the EMI calculator and check how much of an annual prepayment for your own loan can be reduced. How much of the tenure you can reduce of your own home loan. Okay? I am sharing the link. I am supposed to share the link with you guys. So let me share this link with you all. Okay? Let me share this link with you all in the chat box. Okay, so I want you to do this homework number one. Is everyone clear with homework number one? Yes, I've already done that. That is superb. If you have done that already, that is superb. Otherwise, I'll request you to do it before, start of the session tomorrow. Then homework number two, very, very important. Tell your family, basically your spouse, your parents, or your children, and your children about all your insurance policies and the investments that you have made. Guys, very important to start discussing about finances with your family. Okay, get rid of the old mindset ki I won't discuss finances with my family. Start discussing finances. Okay, start talking about your insurance policies, about the investments that you have made, so that your family is aware about it. Okay, so can I get a yes in the chat box if I can expect you all to do homework number two as well? Yes. Okay. Discuss your finances with your family. Then number three, apply for a credit card of your choice. I shared you my verdict, according to my verdict, which are the best according to me. Okay. In fact, I'll request my team member to share a few credit card application links that we have found out from Google. Okay, we have collated these links from Google. You can use these links in order to apply for a credit card of your choice, or you can use you can apply for any new credit card. But I want, if you are not using a credit card, I want all of you to apply for a credit card. If you already have a credit card, I would request you to switch your payments from UPI to credit card, so that you can save that additional amount of money every single month. Can I expect that from all of you? Yes. Yes, you can take from India even if you're living overseas. Yes. Yes. So I'll request my team member, team, can you please share the few credit card links that we have collated, which people can apply to? Okay. Besides this, the next homework tomorrow, I want you all to figure out the Nifty closing price and Nifty 100 top gainer stock. Okay. Before coming to tomorrow's session, just figure this out and come to the session. Okay. So a couple of SBI cashback. So all of these links are from Google. We are not trying to promote any sort of credit card. You can apply via your own as well, or apply or any credit card of your choice. But start using it. It will help you save at least 10% of your expenses every single month. Okay. And tomorrow Nifty closing price and Nifty 100 top gainer stock. You have to figure out. So everyone absolutely clear with all the homework that you have to do. In total, it will not take you more than 5 minutes. Okay, in total, it will not take you more than 5 minutes. Can I expect all of you to do it before tomorrow's session? Yes. Yes. And now, finally, guys, we will be marking the attendance for today. Very, very important that we all mark attendance for today, because there would be certain, big surprises for you all that is only applicable for you all who are marking their attendance. Okay. So let us go ahead and mark our attendance. So you can scan this QR code as well, or you can go to the link which I am sharing in the chat box. Once you have gone to this link, type in done, then I'll guide you how you can fill the attendance form as well. Done, done, done. Chalo. Now let me guide you how to fill up the attendance form. Once you go over here, guys, this is the Financial Freedom Accelerator Program attendance form. Very, very important for each and everyone present over here to fill this attendance form. Okay, let's go ahead and do this together. So firstly, fill in your full name. Share it once again. Sure. I'm sharing the link once. Share the QR once again. Okay. Sharing the QR once again. Okay. Please waiting for 10 seconds. Please scan this QR code, then I'll guide you how to fill the attendance form as well. Done, done, scanned. Chalo. Now let me show it to you. Okay. Firstly, enter your full name. Whatever your full name is, enter that. So mine is Aditya Goenka, so I can type in that. Then what is your email address? Okay. Whatever your email address is, you can type in that. Then what is your phone number? Okay. What is your phone number? Type in your phone number over here. Okay. You can mention that. What is your age? My age is 28. So I'll write 28 over here. Okay. Then what is your monthly income as of today? Okay. Current monthly income right now. So mine is more than 10 per month. So I will choose 10 per month. Okay, whatever yours is, you can choose that. Then how was your day one of the freedom accelerator program experience? Guys, I don't want just a one word answer over here. Just write at least one line. Okay, Rahul sir and we have given it a lot of energy, a lot of effort in order to design this program for you, and we are explaining everything. We would be expecting just a one line answer, whatever your thing is. Okay, specifically, like, let's say this part. How did you whatever the case was for you? Let's say I overall liked the session a lot, specifically liked whatever the case is. If you like the rebalancing strategy, you can mention that. Whatever the case is, I'm just giving you an example. Just give a one liner or more about your experience of the day one of the program. Okay, then what is your monthly income goal from stock market trading in the next 1 year? What is it that you want to achieve? Okay, whether you want to achieve 50,000 to 75,000 per month, or 1.5 lakh to 2 lakh plus per month, or rupees 2 lakh plus per month, whatever the case is, you can mention that. And if you have the opportunity to continue learning from us even after the FFA program, what specific knowledge or skills would you like to gain to generate a monthly income from the stock market and achieve financial independence as quickly as possible? Okay, if you were to continue learning beyond the 4 days of FFA, what specific knowledge would you like to gain? Let's say if you want to gain a completely automated automated AI strategies building. Okay, let's say if you want something like that, you can mention that. If you want to learn about futures and options, you can mention about that. If you want to learn about anything specific, simply mention over here so that it can, help us understand what exactly you are looking for. So, guys, this is how you fill up the form. And once done, click on submit over here. Click on submit. And once you click on submit, your attendance for the day one of the program will be marked. Type in done once you have marked the attendance for the day one of the program. Done, submitted, done. Yes, you can scan this QR code. How to scan this QR code? Simply open your phone, go to your camera, scan this QR code. It will redirect you to a link. Over there in the link, you can fill this QR, application form.
Yeah. And also, everybody, don't forget the screeners, the Alpha Plus screener and the rebalancing template. The team will be sharing them in the chat. Please, please, please. I know that you have loved it, but what's more important is that you go ahead, take it, and use it and get some actual benefit out of it, right? Is that a promise? This that has been shared in the chat.
Yes, guys, the Springpad's Nifty 50 rebalance strategy and Alpha Plus investing screener both has been shared in the chat box with you all. Okay? Can we get it in WhatsApp? No. This is not for people, who joined the WhatsApp group but did not join the program today. It is not for them because you guys are here investing your time and energy learning everything. It is only and only for you guys, and that is why I am requesting you all fill up the attendance form. Okay, very very important for you to fill up the attendance form so that we know that you attended the day one of the program, so that you are eligible for a few special goodies that we'll be letting you know about later on.
Yep.
Many people not being able to copy from chat, that is not an issue, guys. You can simply scan this QR code. Na? You can scan this QR code. Okay, I think were you talking about Nifty 50 strategies and everything? Guys, the link should be clickable for you all. Try to use that. Okay, if still it is not working, I'll request my team to share the. Do you want कि यहाँ पे link clickable नहीं हो रहा है, तो do you want the strategies to be shared in WhatsApp? Do you want that? Yes. Yes, ठीक है चलो. Even though we were not planning to, but because ये Zoom का, there's this weird feature of Zoom which it does not allow us to copy. So I will allow it. I'll request the team to share it over WhatsApp as well. ठीक है? But attendance form will be limited to here only. ठीक है? It won't be shared in the WhatsApp group. Heavy traffic to spreadsheet. Yes, that is gonna be the case, guys. Heavy traffic is there. A lot of you are trying to do it together. So just wait for a few seconds and you will be done. Very fruitful 3 hours. Superb. Thank you so much. Okay?
It's important to understand that we're just getting started, huh, Aditya?
Absolutely,
Just,
guys.
just day one.
Day one. Okay, we are going to be having 3 such more amazing days where you are going to be learning about trading. Trading with the help of AI, completely automated strategies. We are going to be learning investing with the help of AI. We are going to be learning how to pick multi-bagger stocks. All of this in the 4 day of the program. It's going to be an absolute banger for you all. Okay, it's going to be an absolute banger, and there is going to be a few surprise for that. Is everyone done with the attendance form? Is everyone done with the attendance form? Yes. Once done. So, guys, that's it for today. We will be meeting tomorrow at 7 p.m. Okay. Before that, I will be requesting you all to take 5 minutes and complete the homework for day one as well. Okay. Thanks a ton. Thanks. How was guys? How was day one for you all? How was it? Amazing, awesome, mind blowing, great.
Great.
Wow, best session of my life. Fadu, great, awesome. Best session of 50 years of my life. Superb, superb.
Somebody said light-headed. Did we say share so much information? That's great.
Tomorrow is 7 p.m. Okay, 7 p.m. Indian Standard Time. Loved it. Excellent, crystal clear, superb.
Great, great.
Credit card link already shared in the chat box. Team, can you share it once again? ठीक है? I want guys, I want each and everyone to get a credit card for yourself. Very, very important. It will help you just save a lot of money for yourself. Shared in the chat box. ठीक है? Superb session. ठीक है guys, that's it for today. Once you are done filling up the attendance form, once you have noted down the homework for the day, that's it. We will see you tomorrow at 7 p.m. ठीक है? You can log off for the day.
Yeah.
Good
Thank you,
night.
guys. See you tomorrow.
Thank you, everybody.
Bye
See you
bye.
tomorrow. Bye bye. Good night.
Bye.
Recording.